distinguished audience, ladies and gentlemen, it is my pleasure to welcome you at the National Bank of Romania for the annual conference of the Romanian Association of Financial and Banking Analysts. After 3 years online, we meet here again in person at this anniversary conference, continuing the tradition started in 2010, when all but one of your annual conference took place at our central bank. The Romanian Association of Financial and Banking Analysts, comprising almost 120 members, has an essential role in promoting professional views regarding economic topics in a public debate which is too often subjected to populism and manipulation. By increasing public awareness of the real economic issues and solutions, your association contributes to promoting a balanced public message. Another important role played by the Romanian Association of Financial and Banking Analysts is providing internationally recognized certifications, such as Certified European Financial Analyst, Certified International Investment Analyst, Certified Environmental, Social and Gender Analyst, or Certified Environmental, Social and Governance Essential Analyst, adding in this way to the prestige of the Romanian Economic School. The present conference is not an ordinary one, I have to say this. It has an international dimension through the presence of European Federation of Financial Analysts representatives, led by Chairman Dr. Zabalos, and the Deputy Chairman, Mr. Fritz Mosberg. We are glad that the European Federation of Financial Analyst Societies has chosen Bucharest to hold a General Assembly while celebrating 60 years, if I'm not wrong, of activity. The European Federation of the Financial Analyst Societies has members in the 25 European countries, many of them being here today. Now, on the topics of the two panels of today's conference, I consider they are challenging macroeconomic perspectives in Romania in the European context and how environment, social, and governance is going to impact the financial sector. I wish you all a fruitful discussion, and to our foreign guests, I wish a pleasant stay in Romania. Now, at the end of my short introduction, I would like to invite Ms. Daniela Ropota, President of the Romanian Association of Financial and Banking Analysts, to take the floor. Then, Dr. Zabalos, Chairman of the European Federation of Financial Analyst Societies, will address the audience, and the two panels I have mentioned will follow. At the end of this conference, you are kindly invited to a cocktail and a guided tour of the Museum of the National Bank of Romania. Thank you for your attention.
Mr. Governor, dear representative of the National Bank of Romania, of the European Federation of Financial Analyst Societies, colleagues from Romanian Association of Financial and Banking Analysts, the business area, press representative, and guests all over the world through our online channels. I'm honored to be here in front of you, and I hope this event will come with interesting information. I will give you also a short introduction, as I know our guests prepare excellent presentation for you. This year, as our governor said, Romania Association of Financial Analysts celebrates 15 years of activity, while the European Federation of Financial Analysts has over 60 years of activity. Now we join forces to provide you the best overview of the macroeconomic and environmental, social, and corporate governance trends. In this context, the conference is being held in English so that we can share the discussion at the international level, both from the National Bank of Romania headquarters and through online channels. With this initiative, we hope to create a platform of exchanging ideas through a great mix of speakers, both local and European. And this is a very good opportunity for us to see the European view and for our European guests to see how is the economic evolution in Romania, both with the improvements and challenges. Before giving the floor to Mr. Zabalos, I would like to mention some organizational details. At the end of the first panel, we have a special award moment for certified ESG analyst certification holders. We are happy to hand over the diploma together with Mr. Zabalos. As you know, AFBR supports financial education and has a portfolio of 5 international programs, already mentioned by Mr. Governor. At the end of the event, we are going to offer those who are still here useful financial courses and special prizes after lots are drawn with the support of our educational partners, namely Romanian Banking Institute, Envisia, and Institute of Financial Studies. Last but not least, I would like to thank to the AFBR board for its great effort to prepare the whole event, and to our partner and sponsor to support public information through financial events, starting with the National Bank of Romania and going further with PwC Romania, Banca Comercială Română, member of Erste Group, BRD Societe Generale, Exim Banca Românească, Patria Asset Management, and the National Association of Insurance and Reinsurance Company in Romania, UNSAR. At the end of the event, we invite you to join to the lunch. All this being said, I invite Mr. Zabalos, EFA's chairman, to receive your applause.
Good morning. Dear Mr. Isarescu, Governor of the Romanian National Bank, dear Ms. Daniela Roporta, Chairwoman of the Romanian Association of Financial Banking Analysts, national authorities, members of the FAS board, dear financial colleagues, ladies and gentlemen. On behalf of EFAS, let me thank all of you for attending this 15th annual anniversary conference organized by our Romanian colleagues in these magnificent facilities of the National Bank. It is an honor for me, as President of EFAS, to share with you all a few minutes at this opening session. Given that in a few minutes we will have the opportunity to hear the views of several experts on macroeconomic perspective and on ESG impacts in the banking sector, my sincere thanks to all of you for accepting our invitation to participate in this event. I will focus my intervention to give a brief overview of the European Federation of Financial Analysts and our activities. Today, EFAS counts 14 national members associations of financial and investment professionals representing more than 18,000 financial analysts, asset and investment managers. EFAS has more than 23,000 proud professionals in 54 countries in Europe, Asia, and Americas, 35 in financial analysis and ESG analysis. EFAS aims to be not only a center for reflection and think tank, but also a working and discussion forum for qualified professionals and researchers, and finally, but not less important, an international reference in the training and qualification on investment professionals. Examples of this activity include the excellent work done by our Financial Reporting Commission in collaboration with EFRAG and ISB on issues related both to international financial reporting standards and rate-regulated activities. Moreover, several events were organized in various European capitals in collaboration with EFRAG, where EFAS could show leadership on these issues as representative of users. I would especially like to thank Mr. De Cambour, Chair of the EFRAG Sustainability Reporting Board, for accepting our invitation to participate in this event. I just hear that he just arrived from Singapore, so thanks a lot for attending our event. Regarding our ESG Commission, I would like to highlight its contribution to the various European ESG discussion forums, always seeking a better understanding on ESG aspects and their integration into analysis portfolio management. I cannot forget the activity of our Capital Markets Committee, always concerned with contributing knowledge and experience to make financial markets more efficient and liquid. As an example, the research work they are currently carrying out in the area of liquidity in small and medium-sized enterprise markets in Europe. In the training and certification activity, I would like to emphasize EFA's leadership in ESG, in particular our 35 ESG analyst certification, which will exceed 6,000 professional certificates by the end of this year. Proof of the success achieved in this area is the agreement already formalized with prestigious institutions such as the University of Hong Kong, the Sustainability Finance Advisory Council in Mexico, the Health Academy in the United States, with Clarity AI, or the inclusion of the CESGA in the Grand Pilot scheme also in Hong Kong. Another important pillar is our institutional presence and close collaboration with relevant institutions in the financial world. EFAS remains a member of EFRAG, ECMI, XBRL, YIPS, and Wiki. Working with these institutions allow us to position ourselves as European representative of investment professionals. Dear colleagues and friends, the framework in which the analysts are nowadays developing their activity has changed dramatically in the last 20 years. Today, more than ever, an association bringing together analyst professionals is more relevant than ever. Change have given the financial analysis a pseudo-public dimension, being of great value for the functioning of the markets, its transparency, efficiency, and integrity. The professional examination of the information on a given user to provide a profit forecast and estimating a target price and make it public and comprehensive to potential investors enables analysts to influence market, placing them in the focus of regulators, supervisors, and investors. And in this regards, please let me make a couple of points related to the central banks. For users, the role of individual central bank is crucial. One, as regulators and supervisors implementing in the local jurisdiction the adequate financial regulation and financial standards detected by supranational entities like the European Central Bank provides confidence and self-assurance to analysts and the investor in the investment decision process. Also, as policymakers, central bank decisions have a major impact in capital markets. Decisions made or expected to be made on monetary policy, we must be careful with expectations and swiftly reflected in financial markets. For analysts and investors, decisions made related to interest rates and prices, of course inflation, for instance, have a major impact in their models, valuations, and in turn in their investment decisions. In addition, financial analysts' role to increase the transparency and efficiency of the financial markets demand exemplary behavior from analysts, in line with what investors expect from professionals who allow them to make solid-based investment decisions. Finally, on behalf of the EFAS Executive Board, my sincere gratitude to the Chairwoman, Daniela Raporta, and from our Romanian Association for its 15th anniversary, which we celebrate today. Thank you for your excellent contribution to the profession in Romania and your continuous support, active participation, and representation of the interests of our profession within the Federation and in the European and international institutions. Once again, my congratulations on your 15th anniversary and our best wishes for the 15 years to come. Thank you. And just one remark, my best congrats to the new EFAS holders that will receive the diplomas today. Thank you very much.
Let's go. Thank you.
Dear Chairman, dear Deputy Chairman, dear colleagues, friends, I'm very proud. Why? Because 15 years ago, together with another 3 courageous guys, 2 of them are here, Ionuț Dumitru and Florian Bocor and Radu Crăciun. We set up this Financial Analyst Association. So we had this courage to create a voice in this environment, and I'm extremely honored and happy. You know, there is a saying in Romania, I don't know if it's other countries, you need to plant a tree to have and raise, educate children, and to set up a Financial Analyst Association in order to look back and to be proud what you left for your country. So 15 years is quite a lot. The Financial Analyst Association is growing. I'd like to congratulate Daniela Raporta and the board of AFBR for organizing this event. And also I would like to thank you very much to the chairman and deputy chairman that 15 years ago they dared to believe in us and to accept our pitch for adhering to European Financial Association. I remember that at the time it was another Romanian association, so probably we were quite convincing in presenting our goals, and you accepting to kick off the other association and to accept because it's only one association per country. So thank you for your trust, and I'm absolutely sure that this association will continue to be vocal in terms of financial education and in terms of sending messages regarding how the economy is performing, because you have brilliant 120 guys in the association, and they are capable to express a very qualified view regarding how the economy is performing. I have a brilliant panel, so my job is very easy, and I would like to kindly ask the Deputy Chairman of EFAS, Mr. Fritz Melsböck, to first start with his view on the entire region. But before this, I would like to highlight for Romanian colleagues only few, because we have a very, very long CV with a lot of positions. Not too much, but I will try only to select few of them, and sorry if I'm missing some of them. So Mr. Melsböck is the head of macro and fixed income, credit and equity research for a lot of countries in the region. Also, he is responsible head of investment strategy, and that, of course, is providing an input for asset allocation for Erste Group. Many years in experience in global active institutional investors, Central and Eastern Europe. Deputy chairman of EFAS, as I mentioned. Also the chairman, this association is the umbrella organization of all analyst associations with more than 17,000 members in Europe. And also founding member of Austrian Working Group for Corporate Governance, and also the chairman of EFAS Commission on ESG, and also Mr. Melsböck will present a few ideas regarding ESG, and I think there is a lot of room for growing here in Romania. Also, we have some first diplomas here, so I'm very happy to see that under Daniela's leadership, we succeeded to develop also this certification. So, Mr. Melsböck, please, the floor is yours.
Thank you.
Okay, thanks very much. Also from my side, and also thanks very much for your kind invitation to this Romanian conference here. I would like to give you, I was told for being short, so I try to be straight to the point, but I would like to give you a macroeconomic outlook on Romania from a European perspective. Good, first of all, you know, the war weighs on a very difficult environment because, as you know, we had to deal with the pandemic. Then we saw a massive downswing and more or less a recession, a huge recession worldwide. But this crisis is different because it's not comparable with the pandemic, it's not comparable with the financial crisis, because the duration, the outcome, and the consequences of the war are still uncertain. Why I'm saying this? Because everybody thought more or less when Russia invaded the Ukraine that perhaps it's over in some days or some weeks or some months, but that is not the case, and therefore it still weighs on the environment. Of course, the sanctions are mainly affecting Russia, the Eurozone, Austria, and Central and Eastern Europe, not that much, fortunately. And it's still, of course, producing a lot of uncertainty of the sentiment, and there's always a disorientation in financial markets. And you can see that also here on the next slide. The war causes additionally a lot of uncertainty. Why? Because we were expecting much higher growth rates coming out of the pandemic, but of course this was reduced. we all saw a very high inflation also until now, mainly produced by energy and food prices. It has implications for central banks. It has implications for the industry and corporates. Of course, they are giving that further with higher costs. There are still sometimes disruptions in the supply chains. And of course, it has also a government debt impact. But some states which have lower yields on the markets can partly inflate that overall government debt away. I will come to that a little bit later. And of course, it brings a lot of energy uncertainty, but overall, I think it is further enhancing alternative energy sectors, and it's in favor of the climate change. When you are looking to the barometer, I would call it, it's this International Volatility Index. You can see mainly two areas. That was first the Lehman collapse in the financial crisis, and of course the pandemic. And both events creates a lot of uncertainty. You can see that here in terms of volatility. Luckily, the war, this tragic, awful war, was not producing that much volatility so far, and we saw more or less volatilities which have declined significantly recently. In terms of economic growth, as I mentioned before, we were expecting, and the Eurozone growth rate is this middle bar in the lighter blue here. We were expecting originally coming out of the pandemic for last year close to 5%, perhaps 6%. So this was reduced, of course, to 3.5%. And the situation, of course, is still depressing the overall environment. We in Erste Group Research are expecting a growth which is around 0.6% in the Eurozone, which is, of course, very low, but we are not seeing overall a recession. The world has higher growth rates, close to 3% in an average, but overall, after that depressing sentiment, we should see higher growth rates with next year. For next year, we are seeing a growth above 1%, here concrete 1.2%. Good. The war, of course, causes also a lot of inflation, as you know. This is the Eurozone inflation based on different components. And the recent development was overall because also energy prices lose recently dynamics that we see for now overall inflation which is losing dynamics. So the last figure in May was 6.0%. And we expect that this development will go further in the second half of this year and will bring a lower inflation overall than last year. When it comes to our global interest rate outlook, in the Eurozone, the inflation has so far fallen, mainly due to energy prices, and there are only some initial signs that this slowdown will also come in core inflation. The US is a little bit different. It's far away. I will not highlight the US here. And overall, of course, the weak economy and lower energy and commodity prices and an expected end of supply bottlenecks should lead to a lowering of inflation in both economies, also for the US, and therefore we expect for the Eurozone a further rate hikes still this year. So we expect further rate hikes in June and July of 25 basis points each. But now I'm coming shortly to the region, which is our more or less core knowledge in Erste Group, as you know. The region is resilient, I would say, but likewise also having an only moderate recovery. Why the region overall is important to us in Austria especially, because when you are looking to the ATX index composition, and that's the Austrian benchmark index from the Vienna Stock Exchange, you can see that the major portion, and that's weighted based on member weightings of the different companies, and you can see Erste Group is also here highlighted in red, like many other companies like Wienerberger or Voestalpine or Raiffeisen or OMV and so on and so on. Strabag, of course, is very active here in Romania as well. So you can see that the whole Austrian equity market is not based on the local Austrian economy anymore. It's mainly based on Central and Eastern Europe as a region. Why? Because the majority of the companies is generating their revenues and profits out of that area. And that's the main, of course, investment story of the Austrian equity market. When you are looking back, it's also an interesting chart perhaps for Romania, because it shows just cumulative growth rates. So that means all the growth rates since the outbreak of the financial crisis in 2007. And what does it mean? It means that at that time, in 2008, 2009, some voices said Austria and Central and Eastern Europe is more or less close to bankrupt. There was Mr. Krugman who said that, the Nobel Prize laureate. There was the IMF who stated that in a report, because they made completely wrong calculations. They compared just Austrian savings with outstanding loans of the total region. So that means from Bank Austria, from Raiffeisen, from Erste Group, they compared just Austrian savings with the total loan portfolio Austria plus Central and Eastern Europe, and that was of course, a complete wrong calculation. It's the same calculation if you compare UBS just with Swiss savings with the outstanding loan portfolio worldwide, or from HSBC with just UK savings with their loan portfolio worldwide. So completely wrong. And as you can see here, Central and Eastern Europe went not bankrupt, because when you are looking on the growth rates, and I highlighted the higher growth rates in green, you can see that Poland and also especially Romania was able to provide a growth over that period of time of more than 60%. And if you are comparing that with other countries, I'm sorry, with Spain or with Italy or with Greece especially, it's a different kind of region with a lot of growth potential. And that's still existing, and you can see here why it's existing, because it has simply long-term catch-up potential. We also saw that coming out of the pandemic, because when you are looking to the growth rates, which are also here adjusted, seasonally adjusted since the first quarter of 2019, which is the base, you can see that our countries in the region, like Poland, Croatia, Serbia, but also Romania and Hungary and so on, not so much Austria and the Czech Republic, I have to say, was able to outperform former growth rates before the pandemic. I will skip the chart because of time restrictions. This is, by the way, our GDP forecasts. You can see that always updated on our Erste Group website, in our Group Research Center. And of course, the war, as I mentioned before, is still affecting in a negative way the growth rates for this year in 23. But as you can see, Romania is one of the countries which is expected to have the highest growth rate, above 2% for this year. And next year, hopefully, this will further increase. This is perhaps also a nice chart before I'm coming to an end, because it shows also that our countries went not bankrupt. Why? Because it shows here the green bars is simply the total debt to GDP ratios. So that means, you know, the Maastricht criteria of 60%, which is gone anyway, and also the 3% deficit is gone. But when you're looking to our countries, where we are operating in, Czech Republic, Romania, Poland, Serbia, Slovakia, Croatia, and so on, has much less debt to GDP ratios than the Eurozone, for example. Yeah? So the Eurozone is 92% at the moment. It's also a higher rate, but it's not that high like the US, as you can see here. So the US has 123% debt to GDP, which is really huge, and it's not an emerging market, hopefully. And the Eurozone, as you know, is in a much better shape than the US. The only difference is divided in different, we do have one central bank mainly, but it's divided in different asset classes, and that's the problem, because Greece has their own sovereign bonds, Portugal has their own sovereign bonds, and of course you can easily attack these countries from the outside because it's smaller markets. And if rating agencies do not see that, I think they have to learn out of it. But overall, the Eurozone has a lower debt than the US, okay? And especially Romania, of course, which has a debt, hopefully the figure is right, but it's coming from our research team here locally, a very attractive government debt ratio of below 50%. The rating agencies, by the way, also recognize that in the meanwhile, because when you are looking to, also that's the rating comparison to 2010, Austria has still I would say, top rating in this 22 rating scale scheme. We do have now no AAA rating anymore. We do have AA plus ratings. But what I just would like to show to you is that also the rating agencies recognize that all our countries went not bankrupt, because over that period of time, the ratings in the region were upgraded, while, for example, the PIGS states, and nothing again, the PIGS states, Spain, Italy, Portugal, etc., were massively downgraded. Yeah? So, and there you can see also a huge difference. Before I close, I just would like to show you one slide, which is my central slide regarding ESG. And this is this slide here. Why ESG is important? Because it's depending on global mega trends from my perspective. And my slide describes more or less as a central chart which is summarizing everything, how global mega trends will continue to develop ESG and what will make ESG as value drivers. Of course, this is about the traditional areas of E, environment, S, social agendas, and of course, governance. But in addition, I am seeing that local food security, such as digital transformation, will also be important to global operating and listed companies. This will create risks, as you can see here, and of course opportunities for listed companies, but in turn will be also of interest for stakeholders. I would like to conclude with a current example. In the case of Credit Suisse, recently, you know all that case, things certainly seem to have gone wrong in internal corporate governance over decades. Moreover, it is unlikely that the systemically important bank's supervisory has fully processed all the information, on the other hand. So digitalization and social media play also an enormous role, as banking transactions can be executed online in seconds, but at the same time can destroy trust very quickly. And exactly that was the case also for Credit Suisse. So there was, of course, governance failures from the board member, from the board, or also from the so-called supervisory board, and also from the supervisory authority. But at the end, there was also some problems regarding trust because of social media and digital business. So I would like to conclude a responsible approach in the sense of ESG would be appropriate here worldwide. In any case, ESG is relevant not only of the highest interest to all stakeholders, but it's also relevant for the public as a whole, because there is also a lot of pressure from the public. And this interest in the three subject areas ESG should be handled very responsible. Thanks very much. That was my key statement at the beginning. Thank you.
Thank you very much, Mr. Masbek. Of course, being a Romanian guy, I like very much that slide showing that 2027, 2022, 63% GDP growth for Romania, second best performance, compared to only around 50% as an average for this fast-growing region, CE8. So there is a lot of catch-up potential in the level of prosperity here in Romania. And sometimes, I'm talking also about myself, sometimes macroeconomists are thinking more about half glass empty, not half glass full. I remember 2010 when one of the biggest US investment bank called Romania Argentina on the Danube. So we fight it a lot, central bank, Erste also, other banks. We paid road shows to explain to international investors that we will not go bankrupt as Romania, trying to explain, and you showed a very interesting graph here, showing that we were right at that time. And I'd like Mr. Masbek to ask you, thinking about the fact that you are covering many countries, so on outside view, if you could select one indicator, macroeconomic indicator, that would perform better than general expectations today, could you unveil which indicator might be?
When you are looking to ratings from rating agencies, it's a black box, because it's not so standard. I'm saying that pretty much open. Ratings from Standard & Poor's, Moody's, Fitch the scheme, how they are coming to a rating, is not really public. But that also means that one rating agency is doing that difference to the other rating agencies, and they are doing that different to the third rating agency. And nobody knows how exactly they are coming to an outcome in these 22 gradings, which is, from my point of view, also not giving an indication or orientation, because when we are doing more or less recommendations, it's perhaps buy, hold, sell, or buy, accumulate, hold, reduce, sell, but it's not 22 ratings. So you can also easily hide away a little bit when you are operating in that scale. On the other hand, of course, obviously, they include soft facts, which nobody can measure. So soft facts like politics. So how can you measure politics? Or how you can say if the politics here are stable or not stable, but you really cannot measure politics. Therefore, I would say just reduce to facts. Of course, growth is an important figure. Then, of course, inflation, unemployment rate is an important figure still. And of course, all these debt figures like total debt to GDP and annual deficit to GDP. But I would say here that ESG KPIs should be important for ratings in future. Why? Because you can have the worst or the best politics. If you do not focus on ESG, you are not able to deal with future issues. And that's my statement. Therefore, the rating agencies should include ESG.
Interesting, very interesting. My second question to you is related to ESG. I know that EFAS is providing an ESG certification. Again, I would like to congratulate AFBR board for helping Romania to move further in this respect, because an international certification is very important. Could you please describe a bit how our colleagues could get this certification, what means this certification, why it's important, this ESG certification, thinking about, let's say, for the next 5 years?
Okay. I graduated from the university in Vienna in 1990. And I made my CEFA so the certified EFAS financial analyst, immediately afterwards in 1992. And it brought me a lot, because it brought me the university education was not really focused at that time on financial markets, and I got a lot of knowledge from the CEFA at that time, because it was not covered by the university. And was also not covered from different university educational programs, it's ESG. And therefore, I made last year the CESCA as a deputy chairman of EFAS, after many, many years of my CEFA, but it also brought me a lot, because it brings you I was, of course, also a chairman of the ESG Commission for 10 years, but at the end, it brought me some additional insights on ESG issues which are of importance in economies and the financial markets. And I think that's simply my summary, why I think this education is state-of-the-art, and it's also always further developing, including recent topics, and therefore I think it's an appropriate training program to become a nice overview on ESG issues.
Thank you very much. So you presented very interesting slides regarding also inflation and also public debt. Again, Romania stands very good compared to other countries within European Union. Now I'm moving to our second speaker, Mr. Valentin Lazea, and I'd like to briefly present only few of the, let's say, positions that Mr. Lazea had for EFAS guests, because all Romanians know who is Mr. Valentin Lazea. So Mr. Lazea joined the National Bank of Romania in 1993, initially as an economist, later becoming head of monetary policy division. Between 1996 and 2000, he has served as State Secretary, Deputy Minister at the Ministry of Finance. Since 2001, he is Chief Economist of the National Bank of Romania. He participates in the formulating of the monetary policy decisions and in macroeconomic coordination within the Ministry of Finance and the Central Bank. And between 2010 and 2020, he also provided the Secretary for Committee for preparing the changeover to the euro. Also, Mr. Lazea was a founding member of the Romanian Center for Economic Policies, CEROPE, and was also the president of the board of directors of Transfond. So, Mr. Lazea, please, the floor is yours.
First of all, let me thank the AFBR for the invitation to be a speaker today. And I want to make it clear from the beginning that the opinions I will present are personal, not to be attributed to the National Bank of Romania. The topic I have chosen is a general one. It's a global topic. It's not particular to Romania. It's also relevant to Romania, but it's not particular to Romania. It is a topic which will dominate the debate, I think, in the next decade or so. And you see in the US, every other year, they have this debate about public debt, how should it be reduced, and so on and so forth. So, in the last 15 years, each crisis was followed by an increase in public and private debt. Very little is being said about private debt, which is a shame. And why was this happening? Because it aimed at stimulating economic growth and preserving the standard of living. As a result, total global debt has reached, by end 2020, 256% of global GDP, of which public debt 99% of GDP, private debt 157% of GDP, an important increase compared to the level of 195 in 2007. The natural question is and will remain, as I said, for the next decade, at least for the next decade, how will this huge debt be repaid? This is a graphical presentation, and you see how after the crisis of 2007, it kept growing, in a process which already lasts for more than 50 years, and which is unprecedented, because never in times of peace, never ever in the history of humanity, in times of peace, public debt grew without going down as well. It only grew in times of war, of major wars, but never in times of peace, like it does today. Theoretically, there are 4 ways in which debt can be reduced. The first way is war, most often used, but unacceptable in modern societies. Second theoretical way is debt forgiveness, like the old Jews were doing in the ancient times. Every 15 years they have the Jubilee year when all the debts were erased, slaves were being released from slavery, and so on and so forth. But this, of course, entails moral hazard, because once people know that they will be forgiven, they will keep accumulating debt. The third way is inflation, or indeed hyperinflation, which helps debt reduction in real terms, since the value of debt is fixed in nominal terms, which means it's unindexed with inflation. And fourth, and most importantly, is financial repression, meaning penalizing banks' creditors for the benefit of banks' debtors through interest rates set below inflation rates. Currently, of course, the most widely used method is the last one, the financial repression. However, some governments and private agents would also like high inflation to stay on in order to erode their debts. But this puts these individuals and governments on a collision with central banks whose mandate requires them to keep low and stable inflation around 2% per annum. And this is, in fact, the political game which is going on. People who want inflation to stay high, central banks who have by their mandate the lowering of inflation. And crucial in order to achieve low inflation is the fiscal monetary mix. Ideally, fiscal and monetary policies should work in tandem. However, in some instances, they have diverged, so that globally we have had all four possible combinations. We have had restrictive fiscal and restrictive monetary in the second half of the 80s. We have had restrictive fiscal and expansionary monetary policy after the financial crisis of 2008. We have had expansionary fiscal and expansionary monetary after COVID, and we currently have expansionary fiscal and restrictive monetary. Today's situation is especially problematic because central banks are obliged to fight high inflation rates through monetary policies, while governments overall are scared of discontinuing their expansionary fiscal policies given the combination of multiple crises. And we have to acknowledge this conflict of interests globally and in every country, and to understand the political economy which makes the decisions so difficult for central banks. However, in the last 1.5 years or 2 years, we have seen a dramatic shift in the paradigm of monetary policies. It's true, central banks have problems in tightening monetary policy after being over-relaxed since 2009, a period where they had low inflation as an excuse. After so many years, it is difficult to explain to an economically illiterate public why central banks have turned from mother of the wounded, as we say in Romania, to watchdogs. But however, the same public should know how pernicious high inflation is, especially for the most vulnerable persons. The second difficulty for central banks consists in modifying a paradigm that has dominated economic thinking for a long period of time, namely that monetary policy should not react to negative aggregate supply shocks, lest it risks producing a recession. It's true, indeed, that monetary policy is effective in stimulating or reducing mainly aggregate demand, less so managing aggregate supply, because aggregate supply responds better to fiscal policy and to structural reform policy. Now, what happened in the last 2 years, graphically presented here, is that before the crisis, the aggregate supply curve was intersecting the excessive aggregate demand curve, excessive because it was stimulated by very lax policies, at the point A0. I don't know if you can see it, it's the intersection on the right side, resulting into an excessive economic growth Q0 and the repressed inflation P0. But after the supply crisis, which was caused by higher prices, decoupling of supply chains, war, COVID, and so on, the aggregate supply curve declined, moving to the left, resulting into a new intersection point A1 corresponding to a lower output, still above potential output, but higher inflation P1, higher even than the targeted inflation. So, consequently, in order to reduce inflation to the targeted level P equilibrium, central banks are obliged to reduce aggregate demand, moving the curve leftwards, as showed in this second graph. The result being that inflation falls back to the targeted level, but it is unclear if output falls below, at, or above potential output Q equilibrium. And this is a dilemma which the central banks are facing now. The changes in paradigm adopted by the Fed, ECB, Bank of England, and consequently by all central banks in the world can be summarized as follows. First, before it was assumed that central banks' interventions in case of aggregate supply crisis were useless, but now it is thought that such a crisis, if it is prolonged, will result into the de-anchoring of inflation and inflation expectations, which would trigger a spiral of inflation, wages, inflation. We already see this kind of spiral. Therefore, the central banks need to intervene. Secondly, before it was considered that such an intervention must be avoided at all costs because it creates a recession. In the previous graph, Q2 falling below the potential output, before Q of equilibrium. Today, it is thought that such an intervention will probably not result into an outright recession, given the slack produced by previous expansionary policies. And even if it did result in such a recession, this is a risk worth taking for reducing inflation back to target, like it happened in the late 80s. Finally, before central bankers were offering forward guidance, they talked a lot about maximum interest rates, etc. Nowadays, nobody ventures to talk like this anymore, seeing future inflation as uncertain, from which an uncertainty about future interest rates. Now, in face of this new hawkishness of the central banks, politicians have troubles in accepting the newly regained independence of the central banks. Ministries of finance are much more willing to accept high or higher inflation as a means for debt erosion in parallel with financial repression. So solutions number 3 and number 4 from the ones I presented in the beginning. Indeed, up to a certain point, inflation is the best friend of indebted governments. There appears a possibility of conflict between ministries of finance and central banks. But one has to be pragmatic and realistic and to try to come with solutions. And my potential solutions are the following. So conflict can be avoided if, number one, Ministry of Finances and governments in general recognize the drawbacks of high inflation and accept that there are costs in bringing inflation under control, including political costs. Secondly, that everybody recognizes that the financial repression will remain for a long period the main, possibly only, way of reducing the stock of public debt. In other words, interest rates at or below inflation rates. And thirdly, if the central banks do not persist in their ambition to meet an inflationary target of 2% and accept a somewhat higher target, maybe 4, maybe 5%, which can be explained by the fading off of the previous disinflationary factors, the structural factors which brought inflation to those very low levels, and which are fading off, globalization, demographics, the destruction of value chains, and so on. So I wanted to present you the conflicting points and some solutions which will keep the first pages of the economics papers for the next years. And we will see for how long the hawkishness of the central banks can last. For the time being, it is well and alive, at least in the Fed and in the case of the European Central Bank, which in my view is a very good thing. But one has to be wary of the fact that conflicts might arise between policies and between different branches of government because of this. Thank you very much.
Thank you very much, Mr. Laza. So it seems that nothing is graved in stone in terms of economic policies and fiscal and political reactions. What we have learned in universities, it seems, is not more valid. I'd like to ask you one question, and it almost is the same thinking about that glass might be half full or half empty. Regarding half full, because I'm trying to be very optimistic today, could you tell us, according to your view, which indicator might perform better than our expectations today?
Thank you for the question. In my view, the one indicator in which Romania does better than most Central European countries is the inflation rate. If you look, as we speak, at the inflation rates in Central and Eastern European countries, you will see that Romania's inflation rate is lower than in the Czech Republic, Slovakia, Poland, Hungary, the 3 Baltic states, Bulgaria, not to mention non-EU members such as Moldova, Serbia, and others. Only Croatia and Slovenia have lower inflation than Romania. I think this is an outstanding performance, which the press is failing to recognize or to advertise, and I think at least we at the Central Bank should make this point. Thank you.
Absolutely fair and correct observation, and sometimes it's very important to compare Romania with others, because otherwise we are looking in a mirror, and of course probably we are not all the time happy to see what we have in the mirror. Gradually we are moving from, let's say, global perspective or regional perspective to Romania. And the next speaker is Mr. Ionuț Dumitru. So, he had many functions, and I will briefly present only a few of them. He is the chief economist of Raiffeisen Bank Romania, but also he was the chairman of Fiscal Council. He's a university professor. He was also the chairman of AFBR and founding member. And I'm always eager to hear his view regarding macroeconomic forecasts here. Ionuț?
Thank you, Lucian, for your kind introduction. So I will focus my short intervention on the macroeconomic developments of Romania. I was told to be short in my intervention, and I will go very rapidly through the slides. So basically, in terms of real economy performance in the last years, I would say that Romania proved to be quite resilient to different and multiple shocks. So we had the first, the pandemic, then we had the war in Ukraine, so a lot of shocks which intervened at the global level, and our economy performed still relatively well. Looking at the numbers, we had a sharp contraction in 2020 at the beginning of the year when the economy was closed, at least partially, and then the economic activity recovered quite rapidly. And in relative terms, looking at the second graph on the slide, Romanian economy outperformed its regional peers. And actually, that was the case for the last 2 decades, I would say. You noticed probably that the Romanian GDP per capita in purchasing power standards is not anymore the lowest or the second lowest in Europe. It's even higher than in some Eurozone member countries like Greece or Slovakia. It's at the same level currently with Hungary. And according with European Commission forecasts, if the current trend will continue, Romania probably will overpass Poland in 2 years from now. Let's cross our fingers. Our politicians can be quite inventive, and they can derail our growth trajectory. But up to now, I think the performance was quite good. And looking at, let's say, high frequency indicators, in the first quarter, most of the sectors were in the green territory, growing quite well, I would say. Retail sales was quite strong. Unfortunately, in April, retail sales came with a very negative number, but we are still positive on consumption for this year. And looking at the economic sectors, the most dynamic sector is the services sector and the construction sector as well. The worst performing sector was the industrial sector. Last year, manufacturing sector was quite affected. And during second part of last year, we had large contraction especially in energy-intensive manufacturing sectors. We have a potential to recover in that sectors. Basically, the energy prices, which were very high last year, came down significantly, and some production facilities which were closed last year probably will resume their production this year, and there is a strong statistical base effect, and we can have a positive surprise in industrial output in terms of growth in 2023. The labor market conditions are still quite tight. We don't see yet some deterioration in the labor market. The unemployment rate is still quite low and not growing, even decreasing a bit. The number of employees in the economy is still growing. Wages are still going up. And we have all signs to believe that the labor market conditions are still quite tight. The outlook for the economy is still quite positive for the next years. We are forecasting now a 3% GDP growth for this year and an acceleration in next years. Romania is still projected to outperform in the next years the regional peers, again, ignoring the political risk, which is mounting. We are positive on the economic growth going forward, as we have plenty of resources to invest in the economy. We have the EU funds, the normal multi-annual financial package, plus the resilience and reform package. Altogether, we have between 4 and 5%, almost 4 and 5%, between 4 and 5% of GDP money from the European Commission coming in the next years. The absorption capacity improved. Looking at the graph on the right side of the slide, Romania is not the worst performing anymore in terms of absorption capacity. We are somewhere in the middle, at 77% absorption rate in the previous financial package, this year being the last one to absorb money from the previous financial package. So we are at 77%, which is a bit lower than in our peer group in the region, but not anymore the lowest or one of the lowest in Europe, again, somewhere in the middle. The fiscal situation is the most challenging one, I would say, at the macro level. We had in the first quarter of this year a very high budget deficit, although the government is planning to cut the deficit this year. And going forward, we think that the pressure on the budget will increase, looking at the social pressure at least. In the last quarter of last year, we had more than 6% of GDP budget deficit. In the first quarter of this year, we had a similar deficit, although the deficit is targeted to go down to less than 5%, 4.4% in cash basis for this year. Fiscal consolidation plan seems to be extremely ambitious, and we share the view of the Fiscal Council. Basically, they are saying that the budget was built for this year with unrealistic assumptions on the revenue side. Looking at the graph in the middle of the slide, the government is projecting for this year to reach the fiscal consolidation mainly through an increase in domestic public revenues, which are probably unrealistic, which is unrealistic. And next year, in order to reach below 3% of GDP, the government is planning to obtain the fiscal consolidation mainly on the spending side, which is again unrealistic. So basically, the cash target of 4.4 for this year and less than 3% for next year are at risk. And I think looking at the budget execution in the first part of the year, a number above 5% seems to be much more realistic. The main issues in the budget are both on spending, on revenue, and the non-revenue side. Basically, on the revenue side of the budget, we are still facing a huge problem with the tax collection, just less than 28% of GDP. In terms of tax revenues, which is much lower than the European averages, but not only much lower than the European averages, is much lower than our peer group, than in our peer group countries, even significantly lower than in Bulgaria, much lower than in Czech Republic, Poland, or Hungary, for instance. On the spending side, we have very rigid spending. Wages and social transfers are accounting for almost 90% of the tax revenues, which is unsustainable, I would say. So something should happen in the next years in order to reach the 3% target. For time being, there seems to be a huge risk to miss the targets. The current account balance, which is again an issue for Romanian economy, fortunately started to decrease, as last year increased to more than 9% of GDP, 9.3% of GDP, from 7.2% of GDP in 2021, but the increase from last year was driven mainly by the negative shock on terms of trade, the very high energy prices and commodity prices globally. This year, once the energy prices started to decrease, the terms of trade shock is supportive, and that is the main driver probably of the adjustment we saw in the first quarter of this year. Otherwise, the trade imbalance and the current account imbalance of Romania is the largest in the region at least, and one of the largest in Europe, and that should be a concern for the public authorities, especially if we are looking to the positioning of Romania in emerging markets. Looking at the graph from the left side of the slide, we have a twin deficit situation with a large current account and a large fiscal imbalance. So the solution for the current account adjustment for the external imbalance is a fiscal one. So we need to address the fiscal issue in order to adjust the current account imbalance. Inflation, it's a concern for all the central banks around the world. This inflation process is on track for time being at least. Looking at the numbers, inflation is progressing according with the expectations, and we expect inflation to continue to go down significantly, reaching 7% at the end of this year. But I think the biggest challenge for the central banks around the world will be how to bring down further inflation next year and in the next years to reach their inflation targets, which are significantly below the current level of inflation. For this year, the main driver of disinflation is the statistical base effect. So we are going down because of statistical base effect, but next year, I think, and next years will be challenging how the central banks will reach their targets. The key rate hiking cycle in Romania probably came to the end at 7%. We don't think that the central bank will hike more. We expect the NBR to keep the monetary policy unchanged until middle of next year, so we don't expect the central bank to hike, but we don't expect the central bank to cut either. So basically, in the next quarters, most likely the key rate will be maintained at 7%. The liquidity position in the banking sector is extremely large. So we have a large surplus of liquidity, and the central bank seems to be comfortable with that, at least for time being. We don't think that the approach of the central bank will change anytime soon, but yeah, we'll see in the next quarters how inflation will develop and what the other central banks will do. And probably the Central Bank of Romania will react to this liquidity surplus, which is huge by any standard. I will stop here. Thanks.
Thank you very much, Ionuț. Again, trying to be very optimistic, I would highlight the absorption rate for Romania, because indeed we start very slow in absorbing. So if I would think or go back 7 years, I would dare to say that nobody would expect to be above 70% absorption rate. For Romania, indeed, there is potential to grow or to improve things, but again, this, I think, indicator performed better than that time expectations of analysts, and not only analysts. Mr. Dumitru, again, coming back to the same question, as you know that I'm trying to see half glass full. Regarding macroeconomic indicators, which indicator do you think will overperform compared to existing expectations?
So looking at our economy, I think the surprise can come in terms of GDP growth. We have a 3% GDP growth forecast, which is quite optimistic looking at the other analysts' forecasts. But I think we can be still surprised on the upside, at least for this year. The risk is, of course, as always, politics. So politics can derail the growth trajectory in the next years if they will start to implement populist measures. But in order to be more balanced, I would say that on the negative side, what can surprise us on the negative side is the budget deficit. Budget deficit can be significantly above the forecast of the analyst, the current forecast of the analyst as of today.
Thank you very much. And last but not least, we have a very strong voice in the macroeconomic area, Florian Libocor. Also, many positions. I will only briefly select few of them. Florian Libocor is the chief economist of BRD, Societe Generale. also founding member of AFBR, also he was chairman of AFBR. So as I mentioned, a very strong voice, and always very happy to hear his opinions, strong opinions all the time. And I'm sure that we'll get also some insights today. Mr. Libocor, the floor is yours.
Thank you very much for your kind introduction. Distinguished guests, distinguished members of the board of EFAS and other institutions, ladies and gentlemen. It is a pleasure and an honor for me to be here and to share with you what I do believe with a low voice, not a strong one. I saw many faces smiling in the room, and I guess that we should be a bit more relaxed because the future is bright, as everybody say before and maybe after. Generally speaking, I don't think that I will surprise you with my messages. The messages are quite in line with other messages you've heard before. We saw that after pandemic, all the countries, including Romania, recovered in a quite robust manner. But what is quite interesting is to see the behavior of the sectors in the economy, and even more than this, it is a surprise for me to observe that industry is still performing low, very low as compared to services or constructions. In the field of constructions, I've heard some opinions in the recent days that passed, according to which we should discuss or think about a bubble, a sort of bubble in this area, in the real estate area. I cannot say that I am not worried about this probable development, but I think that it's not the case yet. What is quite interesting now, looking at the figures offered by IMF, is that it seems that in the next 2 years, I mean this year and next year, the drivers, the engine of the global recovery will be emerging and developing Asia and sub-Saharan Africa. Might be surprising, but why not, I would say. On the other hand, looking at our economy, Romanian economy, maybe we are a bit more, let's say, or less optimistic, but we are still in the positive area of growth. I mean, about up to 3, not 3. And as you may see, it's 2.6 for this year and 3.4 for next year. We prefer to be a bit more cautious because, as my colleagues said, maybe the future is bright, but we still see risks in the political area, in the economic area, but I will prefer to discuss about the economic area. In the field of inflation, I really love this field. We see that these inflationary trends are at global level are on the way. And looking at Romania, we see that inflation dropped down towards 11% from 14 and some. But this is headline inflation, while core inflation is close to 14. And this should make us to think twice
before stating that this inflationary process accelerates. Globally speaking, I mean, generally speaking, sorry, not globally. Inflation is a very nice story right now because we discuss about monetary policy as being the policy in charge with price control or price stability, and this is true. But we start discussing, or at least I start listening, different opinions about this process, this inflation. And in order to make it short, I will mention few, let's say, phases of inflation. One of these is climateflation, that inflation produced by natural disasters. The other one is fossil inflation. It is connected to oil and conventional sources of, let's say, energy or fueling. The other one is greenflation, moving faster, accelerating the transfer to the green economy will bring costs. Everybody knows. The other one is shrinkflation. I've heard a definition of this shrinkflation as being, let's say, a consequence of a lower or constant quantity of products with constant or higher prices in the market. Might be. The other one is greedflation. Everybody is greedy, at least one time in life. So, are we discussing about macarons of inflation? No. It is not about cookies. It is about many phases of price dynamics. And I dare to ask you, without waiting for an answer, how could a central bank fight with its tools, traditional or not, against all these, let's say, 5 types of inflation, excluding monetary inflation? How the central bank may fight, not our central bank, the central bank, doesn't matter which one, may fight against fossil inflation or against, let's say, greedflation or against climateflation. It will be very interesting to find out an answer to this question, I guess. And I will start with inflation. I will stop with inflation. The perspectives are, as I said, bright. It seems that in the second semester, we will see a 1-digit inflation in Romania. And this might, let's say, might be used as a reason for some of our colleagues to expect some rate cuts. No, we will see no rate cut this year, I guess, as long as we have to deal with other problems in the economy and as long as we still have a quite high core inflation. Let's forget about headline. In the labor market, the figures are quite optimistic. What is very interesting for me is the young persons neither in employment nor education or training. Do you remember all the stories in the last 10 years about educated people? Education. In Romania, the figure is 23.3. And we discuss about people between 20 and 34 years. In EU, it's 15. It's only 15. So, in this field of employment, or let's say of labor force, this is, I guess, this is what should make us think twice when we discuss about future. Because what we see there is the future labor force, which actually does not exist. Current account, together with, let's say, external account, together with internal account, or external balance, together with internal balance, as has been mentioned, form together the twin deficits, the twin problem. Here the problem is the same, I guess. I will repeat, in the field of external balance, we should discuss about trade first, and as we agree that we should discuss about trade, we should discuss about diversification, about markets, products, technology. I believe we should discuss because we didn't before. We are, let's say, in a very strong relation, trade relation with EU. It is quite obvious and normal. 75 to 80% of our trade is done with EU markets. But in the same time, we are captive in this relation. And it's quite nice to hear some voices saying that nothing will happen in Romania if something will happen in Germany, for instance. Come on, it's impossible. What is interesting here is that, and it's good, is that foreign investments continue, in our view, to be high. It's 3.7% of GDP, close to 10, 11 euro billions. 10 to 11 euro billions FDIs. But I will open the box, the Pandora box, and I will say that we have about 5 billion, half of the FDI. 5 billion tax incomes uncollected. Just to make a, let's say, comparison. 5 billion, half of the FDI. Because we start discussing about fiscal position, and in this field, I agree, the targets are quite ambitious, while the instruments are the same, and the challenges remains the same. We still collect extremely low revenues to the budget, extremely low as compared to other countries or to EU average. But we start discussing, and probably you know, about changing the tax philosophy. We intend to adopt, again, that progressive tax regime. Might be a good idea, but probably not now. The main reason for which some voices support such a change, such a switch, is that we are, together with another, maybe 2 countries, we are the only in the EU using this flat tax. By the way, it is not flat. It was never flat tax. At least because of the facilities to different industries. I will not mention these industries. Why actually I do believe that it is not the right moment, and why I do believe that we could continue with this flat tax, as flat as it is. Because we are not as developed as other countries in EU, countries which are, let's say, using progressive tax regime. Unless we will be there next year, we should continue with, in my view, and is my personal view, we should continue with this flat tax, I guess. In the field of public debt, actually, the connection between public debt and fiscal stance is that the interest rates related to the public debt impact the fiscal deficit in a way or another. But here we see the public debt close to 50% of GDP. There are opinions according to which it is 4 times higher, it is completely unpinky, we should do something and so on. Yes, it's true, we should do something, but I guess it's extremely good that we have to manage 50% of GDP public debt. We are still below Maastricht, but I don't know if Maastricht matters for somebody in the EU or not right now. It seems that it's just a set of criteria and dot. It is quite good, I said, because About 10 years ago, or 12 years ago, when we managed 12% public debt, 12% as reported to the GDP, that level appears to be a factor of comfort for authorities. No matter what happens, we have a lot of room to borrow money if we need. And it seems that we are in that position of observing that we borrow money, a lot of money, and right now we should do something. And what to do? By the way, I've heard discussions about aggregate demand and aggregate supply. What we saw in pandemic and even before, but especially in pandemic, was that the prices were lifted up or pushed up, not necessarily by shock on demand, by shocks on supply. And what kind of reforms may reduce, let's say, these possible shocks in the future? Structural reforms. What kind of reforms are we discussing about in the last 20 years? Structural reforms. What kind of reforms are still a subject of discussion today? Structural reforms. So let's try to do something in this field, I guess. By the way, before changing the tax regime. This slide is about bond market and some regional comparison. As we may see, returns in this field appears to be juicy, but it will let's say start to be less juicy in the next year, as likely the interest rates will start decline, the key rates and all other rates, if everything goes right. But do you have any, let's say, confidence that everything will go right? Because I don't. I hope, but I have no, let's say, strong arguments to sell you this idea. I just want to make you to believe it. Like Martin Luther. We will say maybe in about 5 years from now, we had a dream. What should I add in the monetary policy field? What is most important is that this increasing key rates, let's say, development stopped. And I do believe that it is correct, because high interest rates do not pose pressure on civilians or on population, are putting pressure also on the budget and on the state. What will happen next? When will we see lower rates, and what will be the next equilibrium in the field of interest rates? Remains to be discussed. What I've heard till now, and probably everybody knows, there are some opinions according to which 2% plus minus, that expression of price stability in European Central Bank and also in our case, might be a bit higher, maybe 4%. I cannot say if it is correct or not, but probably this will be the future. In the case of exchange rate, I will repeat my message. I do believe in Romanian currency. Come on, it's stable. And as it is stable, is lovable, really. This is my opinion. And in the same time, it is, let's say, my opinion, since about 10 years. There are some voices saying that how come that your currency is so stable? Because you are running excessive deficit, no, fiscal deficit, higher external deficit, and so on. It comes to be stable because the prospects of the economy are stable, and because the economy continue to surprise other, let's say, to be a surprise in comparison with other economies. The recovery of Romanian economy exceeds actually all expectations. The fact that we are able to finance the gaps, it is also an argument for justifying the stability of the currency. What will be the next? What will yes, I know the time is clocking. In the capital market, we saw that positive year-to-date performance of stock markets indices probably will continue. The banking sector, the huge liquidity in the market is not a problem, but is an advantage on one side. On the other hand, what we observe is that those who generate new loans are corporates, and those who are generating new deposits are population, I mean households. In conclusion, I will not read all these bullets. I'll say that, as I mentioned before, the future is bright. I do believe, but in the same time, the future is challenging for us and for any other economies in EU, as long as we will start discussing more and more about that macarons of inflation. Thank you.
Thank you very much, Florian. I picked, of course, what I liked, quote, the perspectives are bright. And I'm coming back with the same question that I addressed to the other panelists. According to your opinion, which indicator might overperform compared to existing expectations?
If we accept that this is an indicator, I will mention exchange rate. I do expect the currency to be stable. I do believe in currency, in national currency. And also, I strongly believe that that mix of fiscal and monetary policies will start working better, because I am sure that everybody understands that otherwise it is quite impossible to see that brightness of the future. Thank you.
Thank you very much, and I promise that I will keep timing of this panel. I'm including myself in this wise thought that we overestimate what we could achieve on short term, and generally we are underestimate what we'll do long term. And here I would like to highlight for our colleagues from EFAS, international colleagues, that will have in Romania kind of big bang event for capital markets, and this is hydroelectrical listings, and this is all hydropower stations in Romania. So thinking 10 years from now, I hope to meet at the 25th anniversary of AFBR, and looking backward, I'm convinced that Hidroelectrica will overperform compared to what we will see on the capital market. So please bear in mind my hint. And now I would kindly ask the audience if you have any questions to the panel before going to certifications awarding. If you have a mic, please, we have on the third row, on the left, my side. Thank you.
I have a question to the distinguished panel. Thank you very much for your very deep analysis on all these macroeconomic topics. I would like to see your view, I don't know who can answer me, about a concern that I see in terms of demographic development in the world. You mentioned that, not surprisingly, sub-Saharan Africa and Asia will be the area of the world where actually the economic growth will be sustained. And I clearly see an impact, let's say, a direct relation of a demographic. Don't you see a risk that in Europe, in 20 years from now, we will be, just to simplify, we will all be old, and the economic growth is anyway also related to the demographic, right? Don't you see this a big risk, or let's say from a public policy perspective, a topic to be addressed?
Who dares to answer?
Perhaps just a short answer from my side. It is a risk, of course, especially also for Central and Eastern Europe. Also in Romania are a lot of people working outside already. So it's, of course, also a demographic issue. But on the other hand, we have to further support all that countries, that they are further developing in a wealthy way to keep all the people here locally. So that's very important, and I think it's also, of course, a task from the banking industry, from the insurance industry, and so on, to keep the people here.
Any other question? There is another question here.
Thank you very much for this nice panel. I've got a question for Mr. Lazea. What is your perception with regard to Romania joining the Eurozone? What path do you expect? What obstacles do you see? And what do you see on the timeline?
Thank you. So Romania could have joined, or could have been serious about joining back in 2014, 2015, when it was fulfilling all 4 criteria. Unfortunately, politically at that time, it was decided to go the other way, by fiscal relaxation, politically again, making everybody happy for the short term, forgetting about euro, about Maastricht criteria. My answer to you is we will be able to join euro 6 years after the politicians will take the political decision that this is the main target to be achieved. In 6 years from T0, whenever that happens, we will be able to join euro.
Thank you very much. There is another question.
Thank you very much to all the panelists for the fantastic presentations you've made. It's been very interesting, especially the presentation about how the world will repay debt, and the 4 ideas that were presented by Mr. Lazea. And I would, on that context of the ideas that you presented, ask you, whether you find that the possibility of having Bretton Woods #2 break up, like we did in '72 when the US dollar decoupled from the gold standard, with a new idea that's coming from every central bank, which is central bank digital currency, which is under the study by the European Central Bank, the US, China has already implemented. And would it not be a form of financial repression in its last stage? Thank you.
It's a very complex question. I think the whole quest of the central banks to develop a digital currency is only a reply to the bitcoins and all other foolish ideas, which stemmed from three major sources: the bitcoin and the foolish ideas. The three being, number one, the libertarians, the ones who wanted to get rid of the state, to have nothing to do with the state. Second, informatic whiz kids who think that by playing on the computer they can invent a new world. And third, the black economy, the ones who don't want to have anything to do. So these three have coalesced, and given the illiteracy of the public, general economic literacy, they have made this big splash, to which the central banks need to reply by these CBDCs, the central banks' Bitcoin. So this is only a reaction to a stupid thing, if you want me. Moreover, people, including, I would dare to say, some people in this room, don't know a basic reality, that every currency in this world is backed by a central bank. And if a central bank goes bankrupt, it is backed by the Ministry of Finance based on its ability to tax in the future. So if the central bank of a country goes bankrupt, the Ministry of Finance steps in and it says, I will make good for the money because I can tax the population for the foreseeable future. And this is what keeps the official money safe and sound and afloat. The fact that they are backed by the central banks and, in case of need, by the... Who is backing the digital currency? Nobody. So my answer to you is that if this world is not completely crazy, which is a big if, then digital currency will have to make room or slowly disappear. But again, if this world is not completely crazy and completely oblivious of basic economic thinking. So no, I don't see this as such a big departure as the breakup of Bretton Woods II. In fact, Bretton Woods II, what it allowed people to live above their means. This is basically what it did. All the constraints have been lifted. Everybody could print money as much as it wanted with the price of inflation and with the price of monetary illusion, yes? People are stupid, they have monetary illusion. Let's give them this illusion in big quantities, yes? Further, to go further from this, I cannot imagine what can happen even worse than this. So Bitcoin or CBDCs cannot add to this already crazy situation which we are in since 1971. Thank you.
I'm impressed by the organizers to end this panel. Thank you very much for very, very interesting questions. Still, I would like to have only one sentence for Mr. Merzberg, because we Romanians, we presented our view about Romania. I would like to see your view regarding Romanian GDP.
Yeah,
one sentence.
Just a very short remark, because as it happens today, Romania issued the first quarter figures for this year. It was 2.3% plus. And I got, of course, some research from our Romanian colleagues from BCR via email. I forwarded that to my EFOS colleagues already. So you can see that Romania is still outperforming Western Europe.
This is not the news, but thank you so much. I'm joking, of course. We are happy to hear good news about Romania. Now, this is the end of our panel. I would like to ask the Vice Chairman of AFBR, Flavius Iacubovici, to come to the stage and to award the certifications of ESG to our colleagues. And again, it's a very, very important event. It's a starting point, and I hope so many other professionals from Romania to get this certification. But Flavius, please allow me to have a picture of this wonderful panel before you are starting your awarding. And again, thank you very much for attending this event.
Thank you, Lucian.
1 second, Flavius, just to have a picture.
Okay.
Okay? Let's have a picture. Da.
Smile. We'll stay here.
Thank you very much.
Today, we gather to celebrate a significant achievement in the realm of sustainability and responsible investing, the awards of CESGA diplomas. I am honored to announce that a group of exceptional individuals have successfully completed the rigorous CESGA program. Now, I invite Mrs. Daniela Ropoto and Dr. Zabalos to come forward and present the well-deserved CESGA diplomas to our graduates. Your presence and guidance symbolize the culmination of their hard work of dedication. I would like to take a moment to invite each graduate of CESGA program individually to join me on the stage. Please, a round of applause for these remarkable individuals who have demonstrated a deep commitment to sustainability and responsible investment practice. Alexandru Vlad Andrei. Șerban Valentin Marian.
Let's go slowly, because the food is very important later at home.
Răzvan Alexandru Rusu. Paul Bădescu Tudor. Very young. Congrats. Jacob Cristian Gheorghe. Călin Adina. Bunescu Silvia Monica. And our President, Daniela Ropotă. To the graduates, as you receive your diplomas, know that this moment signifies not only a personal achievement, but also a commitment to driving positive change in the world finance. Today, we celebrate not only the graduates, but also our collective commitment to sustainable future. Thank you all for being a part of this moment. Together, let us forge ahead toward more sustainable future. Thank you, and enjoy. Now it's time for coffee break.
One kind request from the organizers, if possible, only 10 minutes, because we are a bit late, and this is my fault. So 10 minutes coffee break, 12:25, we should be back to start the second panel. Thank you.
Good afternoon. Welcome to the National Bank of Romania. My name is Dan Nițescu. I'm Senior Advisor to the Governor. I'm also acting as professor within Finance and Banking Faculty, Bucharest University of Economic Studies. I'm honored to chair this panel. I'm not that happy because I'm staying in before the lunch, but I'm sure our lively discussions will add value. As the previous panel was tackling a lot of important topics, we will try to contribute as well. In this respect, allow me to congratulate EFAS, to congratulate the Romanian Association for the 15 years. 15 years of multiple crises. Your work was more than valuable for all the stakeholders, and to wish you success within the new endeavors. We have prepared some questions. The topic of the panel, how ESG is going to impact financial sector. ESG is a very fancy acronym. ESG is present on the tables in all the relevant boardrooms, but ESG is also impacting our lives, is changing the economy, is changing the financial industry. I would like to open up the floor by asking a question, let's say, and inviting two of our special guests to contribute. First of all, we do have here Patrick de Ocambourg, chair of EFRAG Sustainability Reporting Board, personality in this field. He will be happy to share with us some relevant input. He came back from Singapore. Thank you very much for this amazing effort to be together with us today. We do have here as well Diana Mazurkiewicz, Director ESG and Investor Relations, Banca Transilvania, the biggest bank, the largest bank in Romania. We do have as well Ana Maria Butucaru, partner within PricewaterhouseCoopers. Ana Maria will provide us as well some slides with input from Pricewaterhouse as well as her vision related to ESG. Last but not the least, Jean-Philippe Desmartins, co-chair of the EFAS Commission on ESG, as well as Head of Responsible Investments, Edmond de Rothschild. So, EFRAG, International Private Banking, Big Four, largest Romanian bank, so a very valuable puzzle. I'm assured that the input will be relevant. First question about this topic. Considering your perspective, Patrick, what are the top three? What do you think are the top three opportunities, challenges for banking organizations when adopting ESG? In order to open up the floor, please share your views, set up the floor, a global perspective, providing us your presentation. Thank you very much.
Okay. So, thank you very much, and I'm very happy to be here. A night flight from Singapore is time enough to sleep, so it's okay. I would like to extend my congratulations to the graduates and also say that they will have to update what they have learned on a regular basis because it's a fast-changing landscape. So, you know, in order to be, you have a head start, which is wonderful, but on the other hand, you need to keep up. And for the other ones, they will have to, of course, to catch up. So I'll try to be brief, but we agreed with the panel that maybe it would be of interest to give an overview of the landscape in the EU, which is fast evolving. So next slide, please. Oh, no, I can do it. Okay, fine. So, you know, the first key point is that in the EU, it is the only and first jurisdiction to have introduced a legal framework. And this is key, because in other jurisdictions, okay, we live in a Roman law environment, so we like to have the law and then the standards and everything. Okay, that's fine. In many other jurisdictions, they are asking themselves how to stimulate practice and then maybe to have a legal regime. In our case, the co-legislators, on the basis of a proposal received by from the Commission, have decided to establish a legal regime. And this legal regime is, I can briefly describe what are the key features. It's a mandatory regime of reporting on sustainability for all large entities. And I was in Singapore. So when I told them large entities, they were thinking very large, but I said, no, in the EU, it's not so large. It's 250 employees plus, it's very small. Unlisted SMEs. Of course, if you report at group level, you don't need to report at subsidiary level, which is okay, it's natural. But there was an hesitation in Parliament, believe it or not. It will take place over a period of time. 2024, the first year, for the ones that were in the scope of the previous regulation, NFRD. 24 is tomorrow, and reporting early 25. 2025 for the other large entities, 2026 for the listed SMEs, and 2028 for non-EU companies. What the hell does that mean? It means that if you have business in the EU, due to the extraterritoriality element of it, you will have to report on a number of matters in accordance with the European standards. If you are not based in the EU, but you have operations in the EU, to create a level playing field. SMEs will be encouraged to adopt a simplified voluntary reporting system in order to be part of the trend. And, as compared to the international priorities, you have what is under in the legal framework is a comprehensive coverage of sustainability matters. So you mentioned E, S, and G, environment, social, and governance, under standards elaborated by IFRAG and adopted by the European Commission via delegated acts. It means, a delegated act means that it is applicable throughout the 27 countries of the Union without any transposition, which is creating the maximum level of harmonization. Double materiality is a key concept. It means not only the risks and opportunities for the company, but also the impact of the company. Frankly, this is a debate, I had long discussions about that. This is a debate which is exaggerated, because you have to tell me, I might try a test at a moment in time, but you might tell me when an impact has no consequences for the company. And I believe that's very, very, very unlikely. The sustainability report will have to be delivered in a separate section of the management report, and therefore at the same time as the financial statements. And it will be audited and it will be digitized. Most unfortunately, I had a meeting from Singapore with the EU yesterday. Might not be available for 2024, so because of the delegated act, the consultations and everything. I don't believe that transposition into national law of the directive will bring a lot. It will address mostly insurance, the provision of assurance and things like that, but I don't see countries adding to something that is considered already a big step forward. So, I mentioned, you have a legal framework, but you also have a regulatory framework. I try to be brief because in the interest of the debate, and I don't want you to be the last man standing between us and lunch. So the first set of delegated act, the first set of standards should be adopted via delegated act in July. We are expecting any day now the publication of the draft delegated act based on our technical advice, because what we do at IFRAG is we elaborate, we give a technical advice to the Commission then performs its own steps, and then finalizes the delegated act, hopefully in July 2013, so next month. Before that, there is a need for a public consultation of 1 month, and that should have started at the beginning of the week, but for some strange reasons, it has not started yet. They need to press the button. I hope it's not demonstrating some sort of final hesitation before jumping over the last hurdle. We don't know. Yesterday, the meeting with our counterparts in the Commission, he started by saying, "Don't ask me, I'm waiting for the green light." So we didn't know. What is important to know is that it is a comprehensive coverage, because we were asked under the CSRD to elaborate a full coverage of, some people say, too full of coverage. So we have 12 standards, 2 of a cross-cutting nature. ESRS 1 is covering the general principles. ESRS 2 is the disclosures that are cross-cutting in accordance with all sustainability matters, like governance, strategy, impact, opportunity, and risk assessment and management, and then 10 topical standards. So climate change, 5 on environment, climate change, pollution, water and marine resources, biodiversity and ecosystems, resource use and circular economy, 4 on social, your own workforce, workers in the value chain, consumers and end users and affected communities, and 1 on governance on business conduct. So 84 disclosure requirements, about 1,000 plus data points, the granular translation of 84 disclosure requirements. Of course, this is frightening, but this is subject and will probably be subject. That's the decision that the Commission had to make. This was subject to a materiality assessment. So I insist on the following. Materiality assessment, I forget this because this is a bit too technical. Double materiality, what does it mean? It means your impacts on people and planet, but also the risks that you have either from your impacts or from other sources. And risks are opportunities. You don't need to be Chinese to say that, because as you know, in Chinese the word crisis means opportunity. And this means that companies will be highly responsible, accountable for their materiality assessment. What are the material impacts, risks, and opportunities I am subject to? So this is a pivotal element that will have to be done by the management, will have to be reviewed by the governance, will have to be, quote unquote, audited by the assurance provider. I briefly cover this. In a second step, we will be elaborating and transferring to the Commission sector-specific standards, because in fact, the organization is as such. You have the sector-agnostic dimension, which is the one that we have prepared and which is about to be translated into a delegated act. Then you have the sector-specific layer of information, specific to a sector. And then you are required to consider if you have specific circumstances and facts and circumstances in your company that cannot be reflected through a sector-agnostic or sector-specific standard, then this material information you need to elaborate yourself. It's in order to make sure that we have a comprehensive coverage. This is a big difference with other efforts as we speak. I will not move. This will be delivered over 3-4 years. We will start by the high-impact sectors. Another point which, of course, I discussed almost every half an hour in Singapore is, but there are other initiatives. What's happening? You are front-running, but are you living in isolation? Is the EU an island? No, the UK was, or still is. Okay, so interoperability. We have 2 objectives. One, This was given to us by Vice President Dombrovskis. He told us in January 2020, please build on, don't reinvent the wheel, build on existing standard-setting initiatives, even if they are private. And then contribute to the recognition and global progress of sustainability reporting, because we don't want to be front-running and realize that we are alone and that nobody's behind. And the second point, which is very key, we don't want EU reporting entities to have to prepare multiple reports. So we want to aggregate in one single report everything that is needed to simplify the life of everybody, including analysts. So we are working hard with the IFRS Foundation, the ISSB, chaired by my fellow countryman Emmanuel Faber. I assess today their scope is more restricted because they are a focus on climate and the rest is very generic, S1 and S2, the two standards. So I assess today that, in substance, a company complying with ESRS, European Sustainability Reporting Standards, would also comply with ISSB. Climate. But we need to have a recognition, an official recognition at some point in time. But the work that has been done is going in that direction. The second key point is that you have a very, very long-standing organization that developed impact reporting. The graduates probably learned about that. GRI, Global Reporting Initiative. We have worked with them since inception, and I think that we have a high level of commonality on impact reporting. We are working, and that's my last word, we are working on the next sets of standards for SMEs in particular and for sectors, but we are also working on guidance, non-authoritative guidance that I will be delivering over the summer to help preparers and users as well. Our three deliverables will be: how do I perform my materiality assessment? 2, how do I address value chain information under ESRS, because that's not easy, and also an inventory of data points that will be probably reduced following the streamlining exercise of the Commission, the 1,000 plus which I mentioned, in order to allow for a gap analysis by the companies. They will have the total universe that they have to think about, subject to materiality, and they will be comparing with what they have in order to fill the gap. Sorry, I've been a bit long-winded, but we thought together that it would be of interest to all of you, maybe to have an overall and brief presentation. Thank you for your attention.
Dear Patrick, thank you very much. Very good input, valuable and good news from Singapore. I do hope to be implemented soon. Now I'm inviting Ana Maria from PricewaterhouseCoopers to give us her input.
So, hello everybody. In terms of ESG, we are, I think, talking about quite an overwhelming topic, and we heard from Patrick the ESRS topic and the way we will report on our performance related to ESG. But I think it's much more, and in terms of the regulatory requirements that we need to comply with. And if it's something that we learned from the pandemic is that we need to act fast in order to save the cost and the pain that will anyhow come later. In terms of ESG, I think it's important to ensure that we are speaking the same language and we understand the same concepts in terms of how we will deliver the huge target that is to reduce the greenhouse gas emissions with 55% by 2030. It's quite an ambitious target, and we all need to contribute. And when looking at the level of legislation that has come, you know the saying that if you want to eat an elephant, you need to eat piece by piece. But I think we are talking now about a herd of elephants, and it's a big stuff to chew. So in terms of legislation in force, on top of CSRD, it's everything that you see on the screen, which is level 1 regulation and level 2 regulation, which is talking about taxonomy, the way we are looking at activities, the business activities, and the way we interpret which of those activities do have a contribution to environment and to climate. And only for this regulation, we have around a couple of thousand of pages without CSRD. So without CSRD, it's almost 2,500 pages to not only to read, but actually to put into practice and to embed in our organizations. And the requirements get broken down, as you probably know, in the taxonomy by industry sector and by activity. In terms of the way these requirements are mapped, it's on one hand to enhance the reporting and the transparency requirements, on another way to enhance the risk management and from financial risks that are arising from climate and environmental risk. And then, of course, the big objective is to reorient the capital flows to indeed more sustainable investments that are meant to bring more profitable returns on a longer term. Of course, the banks are seen as a focal point because they will be spreading capital into the global economic environment. So clearly the attention is here because they have a pivot role in this, and they will also contribute to the legal and public policies that are coming as well in the same direction. So we have the CSRD and the SFDR, so a lot of acronyms for what is coming. We have the taxonomy, we have also the banking package, which is coming in the same direction, and of course we have the green bonds regulation and things which are talking about public instruments and funds. This is, let's say, the formal way. We have also the tools which are coming also from this regulation, which are talking about standardization of products and standardization of the way we look at activities. We are talking about transparency, being able to communicate to external stakeholders the business decision that we've made, and of course, ultimately the disclosures, the way we measure the business decision that we have taken. Of course, we have the incentives. The incentives are coming, I would say, from one hand, from the ratios and disclosures. By having the ratios, we will be able to be compared, peer companies will be able to be compared once against each other. And talking about your question, opportunities and challenges, so far, we conducted a survey, and clients are still not be able to differentiate when it comes to ESG between banks. Still, it's early days. But clearly this is an opportunity because it means banks can have an active role and can become a front runner or can be known for a certain decision which is meant to do something in this space. Then, of course, we have the green monetary policy, and there are, I think, a lot of funds at stake which will be available for companies, and again, the role of the bank in supporting this initiative of distributing this money to green activities. And, of course, the prudential framework, it comes a bit as I would say as a pain, because after banks needed to deal with financial reporting standards, specifically IFRS 9, which are measuring provisions for the loan portfolio, the level of loss that we will be able to incur from bad debts. Now we are moving this prudential framework also into the ESG space, which means that we need to also understand, and not only understand, but to be able to measure and quantify the potential loss that is coming from climate risk that will affect actually our debtors. Of course, we have a lot of deadlines, and the regulatory requirements have been put to become active in different points in time. SFDR was the first one to come in place, specifically for investment products, and then we have to the other spectrum CSRD, where next year it will come into place. In terms of the strategy, I would bring into the discussion a metaphor. I don't know, maybe the ones of us which still remember Clint Eastwood and the film The Good, the Bad, and the Ugly. This is how sometimes we think about ESG and the companies. The good ones are the large corporates which are in scope of taxonomy and DOD legislation, so therefore for a bank it's easier to get the ESG information because they have it available, it's easily accessible, and also these companies also are interested in issuing, for example, green bonds, and again, together with this, displaying more information. Then we have the bad. The bad are the ones which are actually important for the banking system because are the SMEs, which are, of course, important factor and player not only for the economy, but also in the portfolios of banks. And here is the biggest footprint. 99% of the economic activity is driven actually by SMEs. It has been a big bet to finance SMEs and to support them in growing, and of course it will be also with the new funds coming from EU also to support these companies for their green activities. But for a small company, it's a big burden to be able to respond to the ESG requirements and be able to supply to a creditor all the data points that is needed to compute a scoring, to have a scoring to take a credit decision. So the big question is how to obtain this information without killing the business, without having too much burden on those smaller entities, and still being able for them to access funds in a way that will not negatively influence the green assets ratio of the banks, to be still aligned with the taxonomy. And then we have the ugly, the oil and gas company, which now everybody is thinking oil and gas, is this green, is not green, should we stop financing oil and gas, should we still continue, and these companies have been profitable and have been good clients for banks. So is it fair now to turn our backs and forget about them? What would be the strategy here into a way that we still maintain them as a client without being penalized again in the green assets ratio? In terms of the opportunities, for the good, it's about the information collection, so being able to gather all the information to be able to do these reports, and for them it will be a matter of, given the fact that they comply with so much regulatory requirements, can they obtain, for example, a better interest rate when they want a credit? Can they obtain a higher interest rate when they issue and they have assets on their balance sheet? So it's a question if you can link the ESG and sustainability business with the ability to make more profits. And still, I think this is an opportunity, but it's also a challenge because it's hard to measure and we don't have enough history. For the bad, again, it's, I think, sustaining the clients to understand, the SMEs to understand what they are supposed to do. It's also a bit of education, it's also a bit of making their life easier and having standardized requirements that they can comply with. And for the ugly, again, I don't believe divestment should be necessarily the answer. I think always a moderate approach should be the good one. And it's important, I think, how oil and gas companies are planning for their transition plan, because for sure they are working on it. They are issuing their reports on how they plan to transition. And in terms of how this links to the strategy for the good is the risk on the greenwashing. And here I think it's very good that on CSRD there is an audit requirement. So basically we will be able, once these reports will be audited, external players and stakeholders can place reliance on these reports. And it's about profitability protection for the so-called the bad, the SMEs. It's about supporting them to transition in such a way that is not affecting the bank's green assets ratio. So it's a question how we will deal through risk management procedures with these clients. And for the ugly, it's more about, again, a strategic decision about how do we factor these clients into our climate and environment risk appetite. I will only want to show you one last slide. In terms of priorities and market needs, the way we have interacted with banks so far and what we've seen as a request coming from the banks, from our projects, this is how we mapped let's say the market requirements that have come to our way as advisors. And the key which is happening now, it's the knowledge about the training, having people which understand these concepts, and also the organization and the governance around ESG setup. Then it's about products, coming up with the strategy about ESG products and product design. It's about rethinking the origination model for loans and how do we embed the ESG scorings into the origination model and in the second phase in the credit risk management process. Of course, it's the net zero, the ultimate goal of this whole storm around ESG. And of course, is the data. And data, I would say, it's the biggest challenge because so far we don't have data on the market. Of course, each day is being created. Each day we find more information, but still probably we will need to wait for a couple of more years until we do have very accurate and complete data. But it's a process. So I will stop here.
Thank you very much, Ana Maria, for your insightful presentation. Because macro needs micro, we will pass on the floor to Diana. Diana has a very important role within Banca Transilvania, dealing with ESG, with investors' relations, as well as trying to educate the customers to take the best decision for long run in a sustainable manner. Diana, you have the floor. Opportunities and challenges when adopting ESG. Thank you.
Thank you so much, and first of all, I would like to congratulate all graduates, and I'm sure that from now on, they would look at Banca Transilvania, at least sustainability reporting, with much more of an ESG acumen, if I can say so. So we are ready to engage in a very constructive discussion. And there were two elements during these discussions that caught my attention. First of all, the overwhelming feeling that we as banks have, and the overwhelming feeling that we as banks have when dealing with our customers, with the SMEs. And for us, at least, it felt rather inappropriate to go and ask our clients for a lot of ESG data points before we finish our own discovery of what we are doing good and what we are still having to improve. And we, over the past 3 years in Banca Transilvania, I coordinated and we tried to have as clear a picture as possible in terms of where we are. So, as you know, we started a long time ago, so the beginnings were quite interesting for Banca Transilvania. We had to manage a lot of constraints, let's say, and looking back, we managed them quite well. We learned a lot from our stakeholders, from the partners that we had, and I'm referring here to international financial institutions, and we improved in terms of lending practices, in terms of exclusion list, which is currently a good topic to have. We learned a lot in terms of transparency and disclosures, and we moved to the discovery phase that I mentioned. So 3 years ago, we started to provide to the market and to our stakeholders an improved sustainability reporting, which is in line with the Global Reporting Initiative, so international standards. We actually just finished the 3rd edition of our sustainability report, and each year we try to go deeper and deeper and understand our portfolio, our practices, and when it comes to double materiality, the risk that we are facing as a bank in Romania, and also the impact that we have on the Romanian activity, on the Romanian economy. So just to have some sort of milestones, after we began disclosing non-financial reporting in accordance with GRIs, we then tried to understand if what we report is, where we stand basically in comparison with other players. Being a local player in the market and without having an international large financial group behind us, we felt the need to have some sort of an external validation. And in the 2nd year, we got our report assured by a Big Four company. Indeed, it's a limited assurance that we receive. And also, we engage in obtaining an ESG risk rating from a rating agency. And I must say we had some emotions during this exercise of external validation and external ratings, but the results in the end were good for a player of our size. And we learned a lot. So basically, currently, we are looking at what we are going to do further. And after these important milestones for us, we set clearer targets. We looked at the portfolio, and for the first time, on a voluntary basis, so without any, let's say, regulatory regulation imposed on us, we computed the financed emissions in our portfolio. Now we are disseminating the results and try to integrate those results in the lending practices that we will have in the future. And we set very clear targets in terms of building the green loan portfolio. Coming back to the topic of engagement with the clients, with the SMEs, looking at those presentations, there are a lot of acronyms that we cannot use in the front line with our clients, with our SMEs. So what we are trying to do is to take a very practical approach and to engage in a practical manner with the clients. So understand their concerns and understand the fact that they need to pay salaries and manage the suppliers and all the stakeholders. Do not allow them a lot of space and time to, estimate how much of the turnover is aligned with the European taxonomy. But still, we try to identify those topics that are important for the SME. So last year we carried around 3 campaigns on the energy topics and renewable energy topics, and we reached around 18,000 SMEs customers. And the efforts of those were visible in the sense that the green loans that we granted in 2022 included a much more share of loans granted to SMEs. So in 2022, we granted around slightly over 20% of the total green loans to SMEs, as compared to only 4% of green loans production in 2021. So slowly and step by step, we try to engage with our customers to reach this common goal that we have. But the question remains if it's, fast enough or slow enough. And yeah.
Thank you very much, Diana. Last but not least for this question, Jean-Philippe, considering your roles both as co-chair of the EFAS Commission on ESG and head of responsible investments for Edmond de Rothschild, we would like to hear your vision. Je vous en prie, Jean-Philippe.
Thank you very much. Good afternoon, ladies and gentlemen. It's a pleasure and an honor to be here. So thank you to our colleagues and friends here in Romania to have this event, and especially this roundtable dedicated to sustainability and ESG. I'm happy to see that our roundtable is well balanced between men and women. This is a good step when we think about sustainability. And also we are speaking in the name of Europe, where the asset number one, is peace. So happy also to see that we have a peaceful and constructive discussion and dialogue. So I will speak as a practitioner, as a doer, as we say, whatever as co-chair of the ESG Commission of EFAS, and also in charge of responsible investment in a private bank, which is headquartered in Geneva, Switzerland, but with large activities in the EU, France, Germany, Belgium, Italy, Spain, etc. So fully embarking the issues, question of regulations, whatever CFDR, CSRD, which were already presented. So when we think about financial organizations, what are the challenges, the opportunities that we have for the next years? I will say that first, we come back in the long term with the true objectives that we have as finance people. I mean, financing real economy, financing development, and that was largely developed, the question of development in all Europe. And not speculations. You know that in the last years there were a lot of debate regarding the role and the governance of our jobs. I think that via ESG and sustainability, we really come back to positive long-term and think about real economy. Just one example to remember the past, which is also part of the future. Rothschild family, who owns 100% of our banks, was at the front of financing rail infrastructures in the 19th century in a couple of countries such as Austria, Belgium, or France. So we have that point. The second, I think, opportunity we have, which is in line with the development of our continent and more globally, is financing transition. You know that today our economy are based fully on fossil energies, 80% in the global scale. And we have to progressively, finance, invest, loans, financing towards more green assets. So it means progressively reducing our investment in brown assets and more accelerating investment in green assets. It's not a question of exclusion. It's really regarding the futures and how we have to operate. Very important regarding opportunities, how can we do that when we discuss? We are heavily invested, in European banks, so we discuss a lot with people such as Diana regarding how they implement. And one large challenge and opportunity is awareness and training, so for the human capital. So here again, I'm not the only one, but really I congratulate again our new CESGA diploma. you are some pioneers, but you have a high responsibility in your country. You are not alone. You are part of a club now. You are part of a family, I will say, and I do speak under control of our chair, Jesus, but I think we are thinking about having a dedicated day to all CESGA diploma from all European countries, but also outside Europe, because the success of CESGA is also very important outside of Europe. So, an example being Asia, and we have also many diploma from Hong Kong or Singapore. So this is important to notice. So I stop there with these opportunities. For the challenges, I would say that we have to, in the next year, to digest regulation. I say that in a positive way. I mean, the era of pioneering when we think about sustainable finance ended something around 2015, 2016 with the Paris Agreement. I think now we have to structure. We need a hard law, so we have to digest that. It has already been presented. As climate change is a priority #1 when we think about the E of environment, keep in mind that we have a lot of challenges regarding the methodology, the data for the Scope 3, because when we think in our activities, Scope 1 and 2 are important. I mean, the way we reduce consuming of paper, the way we travel, try to reduce planes and so on, but really the elephant in the room is in the Scope 3. So we as, financial institutions, we give loans, we finance, we invest. That's the Scope 3. And there is a challenge of data and methodology. Here again, I'm confident because I started in the sustainable finance 25 years ago. 25 years ago, we had zero methodology and zero data, but we progressed. So I think that we have to be in that mood. And for the last challenges, I would say, is that we have to embark all the new technologies. I mean, presently, we have a lot of debates regarding artificial intelligence. So how can we learn from artificial interventions to do better sustainable finance? That's a subject. And perhaps say also something positive, because a lot of people think that, yes, our industry will be significantly impacted by artificial intelligence. I mean, I refer to all reports from consulting firms. But the experience we see by discussion with banks, for instance, Crédit Mutuel in France, or CaixaBank in Spain, or KBC in Belgium, is that the best advantage is we will be, more and more productive. So it will not reduce the number of jobs, but it will change the jobs that we have and facilitate and concentrate in order that we can concentrate more on added value activities. So, but having in mind that globally we will have to be more and more skilled and reskilled because of demographic aspect. The point was clearly raised this morning. We know that, so we will work more and more. Because 64, 65, I live in Paris, in France, so we had a long debate regarding the age we have to work for, but the consequences is that we will have to be more and more skilled and reskilled. I stop there, and thank you for your attention. Thank you.
Jean-Philippe, thank you very much for your input. Thank you also for connecting with the first panel and also reflecting the progress, the immense progress that has been done until now. Because you inspired Patrick, he would like to add some extra comments, so please Patrick.
Thank you. No, listening to what Anna Maria was saying, yes, I agree. There is it goes beyond, of course, reporting. It is substance. Sustainable development, sustainable finance, the allocation of finance to sustainable development is one of our key challenges, and that's why we have a Green Deal in the EU. But, listening to all the participants, the key message here, if we had not understood, it's loud and clear. ESG is mainstream now. And in reporting, it means that financial reporting is one leg, but we need another leg to walk straight, which is sustainability reporting. Because without data, there is absolutely no private strategy, no public policy of any substance that stands a chance to succeed. And by the way, that was a comment I made a number of times to the European Commission. You know, sometimes in the EU we put the cart in front of the horses because we are asking for SFDR indicators, we are asking for taxonomy, which is a bit static, etc. But we do not have the platform of data. So it's becoming mainstreams. I recognize that there are many challenges. One of the key ones which has been mentioned is the pace of change, because yes, we are on a journey, but we would like to be to have reached destination already. But you know, we have to be pragmatic too. Two challenges I would like to comment. The challenge for the SMEs, because you're quite right, Diana. It's a real challenge. And in EFRAG, we have representatives of SMEs. And they, okay, you know, but they say something which is very important. We don't want to be marginalized. Because if we are not part, if we do not play our part in the game, then what will happen? We will lose our connections with the larger companies and we will not obtain financing. And they are asking us for the voluntary regime that should be simple enough in order for them to be in the loop. I know it's not easy, but on the other hand, you know, the key message I have for SMEs is, one, you decide better when you take on board sustainability as one of your factors for decision making. Two, your retirement is based on the value of your business in most cases. So when you want to sell your business or transfer to your family, okay, be careful. If you have not onboarded sustainability, it might work in the next 2 or 3 years, but in 10 years' time, you will have undervalued, you will have decreased the value of your business. Challenges for banks now. We are going to address this through sector-specific standards for banks. I was a member of the French and the board of the French Banking and Insurance Supervisory Authority, SEPR. And the governor asked me to chair the Climate and Sustainable Finance Commission, so for 3 years, which I did. Of course, for financial institutions, when they do not have data, it's not easy. Because you're not going to invent. And you go to Urgewald and you try to see, is that reliable? Or you go to another provider, is that reliable, etc., to compute your exposure. So I would say that there is regulatory pressure, yes. We are confronted with the availability of data, you mentioned it. And three, we have to be very careful, and I say it for the regulators in general. Do not push people to leave abruptly certain sectors, because that would be counterproductive. For me, the key point is financing transitions, and Jean-Philippe said it. We need to finance transitions. So transitions is not excluding people, the bad or the ugly, but it is certainly making sure that they are moving in the right direction as fast as they can and as fast as we can finance them. So for me, you know, if we are looking forward, transitions are key. And I say that for the regulators as well, because you know the easy solution is, well, I get out of coal, I get out of oil and gas, so I look clean, and someone else is picking up the responsibility, and will make a lot of money out of that. When we will look clean and less profitable.
Thank you very much for your comments. Coming to the next question for all the speakers within this panel, when we are budgeting, when we are planning from a financial perspective, when we are developing a specific plan, we need to prioritize. Which one of the E or S or G should be prioritized, should be focused, should be approached in order to create synergies for all the stakeholders involved? Please give us your input. We will start with Ana Maria.
You know, the preferred answer of a consultant, right, is it depends. And I could easily argue in favor of each of the letters, E, S, and G. I will choose for now to focus on G, and it was a bit of a controversy for me as well, because initially when we started this new route on implementing ESG and thinking about sustainable finance, the first thought was banks have very good corporate governance, and they do, because they are regulated entities, and clearly they have a robust governance process in place. So therefore, it should be easy, but actually it's not easy, and governance structure need to be revisited and need to be adapted to the new requirements. And with the good governance, I think this goes in hand with also long-term planning, by basically thinking about strategically on how do we want to factor in the strategy, the ESG strategy within the bank. And of course, there are a lot of discussion of linking ESG targets with pay, which will be clearly an incentive. If this goes, it needs to go both top-down and bottom-up, but clearly a board focus on this and clear roles and responsibilities at the board level will cascade in a very structured way the targets within the entity. And of course, this is also an ESG topic in itself, right? Because we need to ensure at the board level that there is diversity, that we have enough diverse people in terms not only of gender, but also in terms of their industry expertise, in terms of their background, to have enough support to give in order to pick the right decisions. So I do think governance is an important one, and I know it hasn't been easy, because as we move into this direction, it's a lot of trial and error. But as we bring more structure into this and bringing the strategy into the picture, governance, I think, will support the implementation of a good ESG strategy.
Thank you very much, Ana Maria. So we have a G. Sorry.
Question.
You need
a comment.
Please.
Microphone.
Please. You need a mic. Thank you. Yes. Well, you know that in 2007, when I heard the first time in the board meetings of EFAS regarding ESG, I never thought that it was going to go so quickly, you know. And as Patrick said, we have to be every day, every year, updating everything. But I have some comments or questions. No? For Patrick, is do EFRAG have any idea if there is any possibility to have a public rating agency in Europe? Because one of the main problems here is that if you check the data of the different rating agencies, you can be BBB or AA or C, depends, because nobody knows what data they are using. No? I have to confess, Patrick, that, and I have to thank Jean-Philippe, chairman of co-chair of the ESG Commission, that the CESGA diploma is updated every year. And we are now in discussions with EFRAG and with IFRS to introduce the standards in our syllabus of the CESGA diploma. So the things that this is a very important topic for us in the near future. For Ana Maria, I have to say that I was shocked when I saw one of the pictures of the slides when you say bad companies, the small and medium caps, because they are not taking into account ESG. I have to confess that later you explained very well, no?
But I think there's 2 points here, is lack of knowledge, lack of resources. So it's clear that we need to finance the small and medium caps in both. But my question is, I'm a member of one of the largest insurance companies in Spain, no? So perhaps this question is not going to be easy for me, but my view is that if you think, as consultancy or a strategic consultancy company, if the council members of the financial institutions really know the impacts of the ESG factors in the business, or just want to comply with the regulation. That's a very important topic for me, no? Because at the end of the day, you have to manage the companies, and I'm not so sure. Perhaps the Deputy Chairman is going to say something, because for many, many years, decades, we have discussed about the G, and later we see what happened in the markets, no? For Diana, I have to say that I'm more than happy to hear that you are doing a kind of ESG ratings, because we need to understand which key factors you take into account to decide it, the next generation funding, if you offer a loan or not, because at least the European directive oblige all the, I'm going to say, banks or financial institutions to explain properly ESG factors to the minority investors, or even much important if you are going to offer a loan. In this sense, I have to say that EFAS is working. We have already in Spain produced, together with the stock exchange, an ESG ratings for small and medium caps. We are doing this independently, and it's a project that EFAS will take care, and we hope to offer an ESG rating for small and medium caps through EFAS in the near future. And Jean-Philippe, thanks a lot for your efforts to develop not only ESG, but also the training and qualification in EFAS. And I have to say that we are not only focused in financial analysts or practitioners, financial top managers in the financial markets. Since 2 years ago, EFAS is working also in what we call ESG Essentials. As you know, it's a training program online to try to explain to financial advisor or financial practitioners, then later has to explain to minority investors what to do and what they need to understand the minimum knowledge on ESG. That's what I want to say. I'm not sure if they are going to answer or not my comments.
Thank you very much for your comments and questions as well. We are happy that the speakers are inspiring you. So Ana Maria, if you'd like to add something, the others I'm inviting you to add them on. Yeah. Ana Maria, please, and then Patrick.
So I think the question was around the level of knowledge of the board members and how do we trade off between being compliance versus treating this as a strategy and focal point, because the business is happening. Yeah, we cannot stop the business until we figure out what ESG means and until everybody is prepared to take on a green loan. And of course, this is one of the challenges, right? Because we need to operate the business as usual while also handling the ESG. And I think on a spectrum, of course, it's always a choice. We can have a choice as a company to have compliance only. What are the minimum things that we need to do that we do not cross the line? And we can have the other end of the spectrum where we want to make a difference. We want to be front runners. We want to be known for something, and hopefully, of course, in the process, benefit from new markets, new products, new clients, with the purpose of making profits, because this is the definition of a business, right? Ultimate objective is also to make profits for their shareholders. So again, it depends answer. But of course, the training, as you saw also in terms of requests and basically enhancing, upskilling the knowledge, I think it's clearly a focus point. And not only, of course, for board members, it's for everybody. Diana was mentioning that they needed to do it also at the front office, yeah, because the relationship manager is the one discussing with an SME client and requiring information, and you need to have to be prepared for this dialogue in a way that the counterparty is able to respond. And again, I do see it also as an opportunity. On the other hand, I hear a lot of board members saying, everybody is talking about opportunity and huge potential profits, but we cannot really put our hand on it. Yeah, where is it? What is the product that will make me rich as a company? Yeah, by embedding ESG in the business. And we are looking at the Western countries, which are a little bit more advanced in implementing ESG strategy than Central and Eastern Europe. And we do have some example of ESG products. However, indeed, there is little correlation still, because the time horizon is still too small to say, because we have these ESG products, we became more profitable, or our risk decreased because we are investing in a sustainable way longer term. So I think time will tell, but I think it's important to also small step or big steps to try to experiment with something and come with also sustainable products. And I think Jean-Philippe shared his experience with this, and it was a good experience. Yeah, it played out quite nicely.
Super. Thank you very much, Ana Maria. I'm inviting all the others to answer as well within their round. So Jean-Philippe, E or S or G from the priorities, from the resources,
rapidly,
but also
because
the
I see that Fritz would like to say a word.
No, I just do have a remark, not a question, because answering that, what is weighted in the ESG area? Because as you know, rating agencies are rating companies in a traditional financial way, but they do have also models now where they are existing models, I saw it already, where they are weighting the different E, S, and G areas. So for example, for the banking industry, the G is weighted with 59%, while for example in the automotive industry, the G is weighted for 32%. So it's completely different. It's existing for 60 different sectors, and their models are based on different ESG weightings.
Thank you. So, Jean-Philippe, include also the comments, please.
Yes, rapidly.
Rapidly.
First, keep in mind that especially when we think about the finance industry, G is at the front. Why? Because good governance is not a guarantee of long-term performance. What is sure is that poor governance is a guarantee of non-performance, whatever sustainability. And when I say governance, of course, it's corporate governance, the way you treat your investors, but also internal control, business ethics, laundering, etc., etc. When you think about big problems we had with some European banks, such as Danske Bank in Denmark or Credit Suisse, the big hot potatoes were coming from governance. So that's my first remark. Then we have, and it has been said, to think about a balanced way we address sustainability, and that's the EU approach, and that's, we come back to the definition of sustainable development, Brundtland Report, United Nations, 1987, where we have to think about a balanced development, including environmental and social factors. That's what at Edmond Joachol, where we have an internal and a proprietary made model, we always have balance between the three blocks, which are environmental, social, and governance.
Merci beaucoup, Jean-Philippe. Diana, please.
Yes, I will respond from two angles. So in terms of what is more important when we, for instance, are rated, I wish I had a clear answer to that, because we have our Sustainalytics rating, but in addition to that, we also have a number of unsolicited ratings that we became aware of. Maybe we could have more, I don't know. And by trying to, compare them one to the other, it's very difficult to understand if they are looking at the same things or what is the weight they give to various things. So I don't know, but coming back from what we do as a bank, when we look at the transactions, we try to take account of the dimension, the size of the company, and ask relevant questions, both for all the letters, so E, S, and G. But obviously, we can go and have a lot of, analysis and data points in terms of E and S, but eventually the decision process, the decision-making process is somehow steered by the G, by the governance of that company.
Thank you very much, Diana. Patrick, I would like you to give us some input related to the question, as well as with the public rating agency in Europe, a hot topic for the moment. Thank you.
Maybe on the rating agency, a brief comment. We had rating agencies. Well, they were in infancy to a certain extent. They were not big enough. And you know what? This is because there was no data. And you know, they were spending, I met them a number of times, they were spending 90% of their time collecting data through questionnaires, and the quality of the data was not good enough. But then, 10% of the time they were trying to put together some sort of scoring. So the scoring mechanism can be discussed. What is the weighted element, each E, S, and G. But the data was crucial. And that's why they've been acquired by data providers and data aggregators. But my point today, with a public sustainability reporting system, whereby data will be available, assured, quality, publicly accessible, free of charge, the cost of entry to create an agency is going to reduce immensely. There is a big fight. You know, let's be frank. There is a big fight now because we are somehow modifying the business model of the large data providers that have acquired those agencies for a token, by the way. So, you know, the cost of entry for analysts, quote unquote, and other stakeholders to create an agency, maybe it should take time, not too quickly because the data is not yet available, but in 2 or 3 years' time, I think that frankly it's going to reopen the market for scoring. And then you can have, and by the way, I would recommend that this be done in a transparent way, because you know, the weighting system is unknown. Someone mentioned black box, so you know, I am in favor of transparency. As regards the prioritization of E, S, and G, you will not be surprised. I don't know how to prioritize.
But if you are invited to make up a budget and split the money,
well,
how are you going to split the budget?
I would agree to start with. You know the Chinese proverb. You know the fish is starting to rot from the head. So I would start with governance, quite frankly, to have the right direction of travel. Then let's be careful. We need to tackle, there are obvious priorities in terms of climate, for instance. But you know, there is also something which is important, which is just transition. Because you know, if I modify totally my environmental approach, but at the expense of social aspects, and in certain industries, it may vary from one industry to the other. If I take, for instance, the apparel industry, you know, social factors are key. If I have sweatshops in Asia that produce my shirts and my, you know, that's a big problem. Yeah. So, you know, I think it's highly sectorial, but I would encourage to have you know, the EU has made a decision. We are not going to prioritize. We think that the various factors need to be taken on board in a balanced way. So let's be balanced depending on the sector sensitivity, but starting with governance, in my view.
Thank you very much. Please, the question. Two questions, comments.
Thank you.
I'm glad. Yeah. Please.
I tried to listen carefully to what Anna Maria said and what Diana said. My understanding so far is that the ESG reporting standards are developed for blue chip big companies, which is fair and which is okay. But it's also the question, if we look at SMEs, we now have the approach, one size fits all. Do we overburden companies, let's say with 250, 500 or 1,000 employees, where you really have tiny management teams? And what Jesus also said, it's a question, do we have the people who can implement all these ESG standards? And my concern really is that overburdening SMEs will concentrate industry standards, meaning we will have less competition, we will have many companies that will sell out to bigger companies that will change our competitive environment completely. Further on, I do see the probability that we will put on hold to globalization because certain suppliers globally cannot deliver. And this is something where I really think we should continue to discuss that to have a type of relief for SMEs.
Thank you. Diana, if you would like to add some comments.
Yes, I might be at risk of repeating something that I've said, and indeed, it's true, there is a lack of knowledge in the SMEs, and not only that, but it could be the case that they don't find it justifiable, at least at this moment, to put in place all the ESG reporting and compliance infrastructure that we might be needed to comply with. And we felt it on our skin during this sustainability reporting journey that we had on our own. What we are doing, as I said, we reduce the ESG data points that we require from companies when we perform the credit analysis, so on a transaction basis, from 200 data points for the blue chip company, large corporates, to a chewable list of ESG data points to smaller companies, and why not to even micro companies.
Thank you, Diana. It was another comment here, would like, please, quick one.
I have a question for Patrick. You mentioned about your visit in Singapore and somebody telling you about that you're an island in Europe, you're doing something in isolation without considering us, right? And I'm thinking a little bit broader, right? So I see three economic blocks. We are European Union, and North America, and China/India, right? So I would like to ask you, what are the implications you see, assuming that we manage to do this challenge, right? To bring to completion this challenge, to have a great ESG framework. What will be the implication for economy, right? So with a lot of course correlations with China's industries, I'm thinking very, very superficially, but I think then we need to stop on many business with China, for example, because they don't comply with many of these KPIs. And also for North America, that is also, from a geopolitical perspective, is a strategic ally and everything, right? So I would like to see your point of view on this. On this.
Well, first of all, the world is evolving fast. Okay, with one big question mark. What will the US be doing? Because that we don't know. I mean, there is a big controversy today in the US between, I would say, the blue states and the red states, Democrats and the Republicans. I was on a panel a month ago with one of the commissioners, Esther Pierce, who is totally against ESG reporting. She believes it's nonsense, but afterwards she told me, Probably Gary Gensler, the chair of the SEC, will go through because he will have a majority of 4 against 7. I will be in the minority. That being said, it's postponed, 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 and it's not easy. I was discussing also with BlackRock, and BlackRock mentioned that they had seen an outflow in the red states compensated by an inflow in the blue states and in the EU. Amazing. So, you know, and it's worrying even for democracy and for the US. I will not elaborate, I can elaborate further. So if we leave aside the US, the rest of the world is moving. Under, if I may say so, the joint efforts of the EU pioneering, GRI being the historical, you know, waving the flag of impact reporting, and the ISSB trying to establish a global baseline. So that's my experience. And now we can take the short-term view or the medium-term view. Is it good for the European economy or is it not? I think it's good. I'm going to tell you why. Because I believe that you decide better when you introduce the sustainability factors in your decision-making, point 1. Point 2, you need to establish also proper relationships with your stakeholder. And finally, I see flows of capital coming to the ones that will embark upon ESG reporting. So, you know, the availability of capital, lending or financing or capital, will be on the side of those who will invest. So I don't know. Maybe it's a medium-term view. You have to live with the pain today for a better future.
Thank you very much. Please, one quick comment and the last word from the panelists. Please, Florian.
Thank you. It will be very short. I'm a bit puzzled because we are discussing about ESG, economic, social, and governance, no? And at your question, which one is the first, E or S or G? All answers was G. When budgeting something, yes, Patrick said we should be balanced. And I'm puzzled because we are discussing about business, about economy, not about governance. Why the governance should be the first? I mean, are we in that trap of making rules? It is nice to make rules. And it's even nicer to impose the rules. But let's bear in mind, we are discussing about economy. Thank you.
Thank you very much, Florian. We will take this over the lunch to debate it in a broader manner. I will invite the panelists to address, because the title of the panel is how is ESG is going to impact financial sector. Please give us a takeaway, either a word or a sentence or something to link the impact with the ESG. What do you consider relevant for those special guys in the room to take it away? Diana, please, you have the floor.
Thank you for prompting me first. But obviously, we are witnessing a change. We have immense pressures coming from investors, lenders, creditors, regulators as a bank, and we will have to digest those pressures and respond to those pressures in a responsible manner. On the other hand, we have seen that we are impacted by what is happening in the social and economic environment, and we understand now better how those risk and ESG threats are affecting us. And for that, we are better equipped for further decisions in the future. Thank you.
Thank you, Diana. Patrick, please.
My takeaway is that we have to be careful. Let's not take ESG as a compliance exercise. It is a business exercise, to answer your question. Because frankly, you know, if you do not run your business, by the way, if you do not perform your analysis, taking into account ESG, you'll be dead in 10 years. I mean, or even before. So it's a business decision, and it's a business exercise. You're creating the data that you need to manage better. And manage better starts with governance. I'm sorry.
Thank you. Thank you. Jean-Philippe.
Yes, first point, just keep in mind that there is no contradiction at all between sustainability and business performance, and we see that as investors for the last 15, 20 years, as, practitioners, but you have also a lot of academic research on that. That's something for business. What is sure is that we need adaptation. There is a strong correlation between sustainability and innovation, and the present and future of Europe is innovation and then sustainability. For two metrics that we ask systematically with banks, no governants are just going to take one social and one environmental to see the balanced approach. For environmental is that how much do you invest in brown assets, how much in green assets when you have loans or financing. I'll give you an example. A French bank that told me that every year minus 1% for brown, plus 4%, factor 4 for green. That's the way they move. And for social, the key aspect is training. Do you train, whatever, for ESG or artificial intelligence, how do you skill and reskill your people to be performant? Thank you.
Thank you very much, Jean-Philippe. Ana Maria, please.
I would close by bringing some more light on the shock that I created by clustering the companies into the good, the bad, and the ugly, and put another component that when we are talking about governance, I link that in my mind with strategy, and when we are talking strategy, we are talking how we are going to do the business when putting the ESG components on the table. And the way we need to think about clients, current clients or future clients, it's about on two axes. On one hand, we have the physical and transition risk that we need to understand how much they are exposed to this. Is it low, is it high? And on the other side, we have the viability assessment. Will this business, after doing the physical, moving through physical and transition risk, will they have still a viable business? Some will die in the process, some not. And this is why I was saying that I think this is how we should cluster now clients, to have the regular clients, which is easy, small physical transition risk, and very viable business. Everybody wants to fight for that. And this is why it's not very profitable. And then we have the ones which have high physical and transition risk. And then the question is, will they have a viable business in the future? Because they will be able to get finance or somehow finance these transition and physical risks. For the one which they will be able to do so and still they will be viable in the future, I think that it's a nice market to have and target now. For the ones they will end up with high transition and physical risk and not being so viable in the future, we need to think about a deleveraging process. So I think this is another way to think about reclustering the clients and not necessarily what I showed initially. Yeah, this is the way we move from what we are doing now as a business to where we should be when factoring ESG into the equation. Thank you so much.
Thank you very much, Ana Maria. My last word as well is basically a sort of an invitation to all of you to contribute, to cooperate, to share expertise in order to transform the ESG, the fancy acronym, not to be considered a penalty, to be considered an opportunity with a long-term positive impact for our economies and societies. Thank you very much for your great contribution. It's a sort of a tombola, a surprise for this.